is Perumal, the one with the red door. Perumal. Hi everyone. Okay. Hi, can you hear me? Am I audible? Okay, we'll have to share the mics today. But thanks a lot for waiting. I'm sorry, it's not because of anyone's tardiness, it's because of the volume of traffic outside. But it's still a pleasure to have you back, hopefully energized. And today we are going to dive a bit deeper into, first of all, we'll start the day's proceedings with a deeper dive into, whenever we talk about PACM, we talk about all the high integrity and high impact orientation of this mechanism. But we also thought it might be useful to give you a behind the scenes peek into why is it that we make all these claims about the mechanism actually being high integrity and high impact. As you all know, the governance framework of the PACM is such that there is a supervisory body of the mechanism. We are honored to have 3 of them representing the supervisory body on the panel today. And I'll actually not talk much. I'll hand it over to Mbai, who will talk a bit about the overall SBM and then the sub-panels that he also is leading the work of. Over to you, Mbai.
Thank you, and good morning, colleagues. I will just introduce the supervisory body of the UNFCCC Article 6 mechanism, which is called the Paris Agreement Crediting Mechanism. You know that mechanism was established by the CMA and is under the CMA and is composed by the representative of all UN regions. We are 12 members representing 2 members per region, the 5 regions, 10 people, plus 1 coming from LDCs and 1 from small islands. And we have 12 alternates. But all of us participate at an equal level when it comes to meetings. And that body was mandated to develop this new mechanism based on the rules adopted in Glasgow by the CMA and based on the CDM, but also the best practices of all existing carbon market mechanisms. And you know, there are many new requirements that are coming from the CMA in building this new mechanism. And mainly, we can consider that this new mechanism develop rules, methodologies, guidance, tools that are more conservative than the existing ones, based on the requirement and the mandate we receive from the CMA. For example, when it comes to some elements in relation to methodologies, when you'll go through the new mechanism, the baseline can't be equal to the business as usual. The baseline must be below the business as usual. And the baseline must take into account all elements related to NDCs, to the Paris Agreement goal, that make this mechanism more stringent than all the existing ones. But also you need to bear in mind that we were mandated under the CMA, under the SBM, based on the rules developed by the CMA, to include all activities. The mechanism is activity neutral. We have emission reductions as well as removals, all type of removals. The only activities that are not taken into account at this point are the avoidance, because we have a specific mandate in relation to the avoidance that we will consider only after at 2028. And in this mechanism, it's a very inclusive process. All meetings are made public. You can follow the meeting. And before the meeting, all subject to be discussed, and all drafts, all elements to be adopted are made public well before the meeting. And all stakeholders provide input before the meeting. And all inputs are considered, because we have a summary of all the input and by the Secretariat, and that is considered. Meaning, it's your mechanism. And you have the opportunity at many levels to provide your views and your concern. That is at the level of the mechanism itself. But under the mechanism, we also have panels, a methodology panel constituted by experts coming all over the world, very eminent experts from university, from the private sector, from NGOs, and selected based on very rigorous criteria under a roster of experts. And we try in these different panels to have a balance between the regions, to represent regions within these panels, as well having gender balance also in those panels. And I forgot also to stress that even in this SBM supervisory body, parties are invited to have a balance, a gender balance, when making proposals in the representation of the different regions. And when we develop the different methodology. As I said, it's done at a Met panel level. Currently, I'm the co-chair of the Met expert panel. And that panel also works have the same mode of work than the supervisory body. They call for input coming from all experts to develop methodologies, to develop tools, to develop guidance. And you have the possibility also at the early stage to provide your input on any methodology, any tool, any guidance coming from that specific panel. Yesterday we had a meeting of the Met panel in Bonn. We have around 6 to 7 meetings every year. And between the meetings, the experts are working also in small groups to try to provide all the mandated documentation and methodology. Because we are trying at the Met expert panel to follow the mandate of the supervisory body, which aim to produce at least one methodology before the COP in the 6.4. And to do so, we have 2 tracks. One track is trying to update the CDM methodologies. Because, as you know, based on the requirement of the Paris Agreement, and particularly on Article 6, the CDM methodology are no more in line with the requirement of the Article 6. To use them, we need to revise the baseline, the additionality, the suppressed demand, the common practice tool. All of that have to be changed completely based on the different requirements we have in Article 6 that are more stringent than the one we had under the CDM. It's why we are working now to do the revision of those methodology. And we privilege 2 of them, one in relation to renewable energy, and the second one to the waste sector. And we expect before the COP to get one of them being approved by the supervisory body. With all the associated tools, because it's not only a methodology. For each methodology, you have many associated tools that are related to that methodology. At the same time, the SBM was mandated also to work on the transition of the CDM activity. It was a decision, it was taken, and now we have received a lot of requests of projects to transition, more than 1,500 that are eligible, and we are waiting for some of them for the approval of the host country, because the transition can't happen without the approval of the host country. But some of them are already approved and are now 6.4 project, a registered project. So you need to know that we already have some projects that are registered under the 6.4, but they are CDM transitioning project. We don't have new 6.4 project because we don't have approved methodology under the 6.4, and to allow PPs to submit new project. Is what I was saying. We expect before the end of this year, before the COP, to get new methodology, and if it is done, PPs may submit project in relation to renewable energy or to waste sector, landfills, and that may lead to the registration of new 6.4 project. But at this point, we only have transitioning CDM projects that are registered under. And we are working on all the different tools and methodologies to try to get them ready. At the same time, before I give the floor to my colleagues, at the same time, we are working on new proposal because we have adopted the two standard, the one on the requirement for developing and assessing methodologies, and the standard on activities involving removals. Any PP may submit a new methodology based on those two standards. But even if you can do it, you need also to take into account all the adopted new standard. The one on baseline, the one on additionality, the one which is going on permanence and reversal, and all the different adopted standard has to be taken into account when proposing new methodology. We have already received new proposals in clean cooking, in hydrogen, in water pumping using renewable. And we are also assessing those proposals that can lead also to methodology to be adopted by the supervisory body. There is a lot of work. We have many meetings of the supervisory body, at least 6 meetings a year, and many meetings between those physical meetings in Bonn. And we have our panel supporting us, what we expect, and we are happy with what we have seen. The stakeholders are very well involved in the process. Every time we call for submissions, we receive more than 200 submissions coming from different areas, whether it was in methodologies or in different guidance or rules. But what we have seen, those submissions mainly come not from parties, and we will be happy to see parties more involved in that. We understand there are very technical issues, but we will invite parties in their country to try to see how they can organize themselves with the different communities, with the university, the local communities, the NGOs, the private sector, and see when there are some calls coming from the supervisory body, how the proposed draft create some concern based on what they find on the ground to make proposal. But because all proposals, submissions, inputs are considered, and we'll be happy to see more proposals coming from parties. We see some university, some consultancy firms, we see some UN institutions, some international institutions making submissions, but we think also on the ground there are some reality, and we'll be happy to see those concerns being forwarded to the supervisory body. That is what I can, just as introduction, to present the supervisory body of the Paris Agreement crediting mechanism, and open to respond to any question. And I have my colleague, Thierry, who is also member of the supervisory body, and Mutazi, member of the supervisory body, and also co-chair of the accreditation panel, because he will talk about that, because we have already accredited some DOE, designated operational entity. Thank you. Zubair.
Thank you. Actually, I would hand over to Mukhtazi or Thierry if you want to talk about quickly about what is it that your sub-engagement within the panels look at.
For giving me the floor. And Just taking over from what Baye has been explaining about the supervisory body and its work and what we are doing in terms of trying to enhance environmental integrity as well as the integrity of the carbon market itself. There is a lot of work that is done by the supervisory body being supported by its support structure, which is the Secretariat. But there's also a lot that is expected of the host country parties. And many of us in here are host country parties. Under the previous regime in the CDM, there wasn't much involvement of the institutions within the host party itself. Maybe you would have one person as the focal point, and maybe one or two other people working on it. But now we need to have full involvement. Article 6 requires us to have a lot of involvement. So I'll touch on a few of the things that we are expected to actually be involved in as host parties that will also assist in terms of enhancing the integrity of the carbon market. So I'll skip the obvious ones. Obviously, you need to be part of the Paris Agreement. And then you also need to have submitted your NDC, and you need to continuously ensure that you maintain that NDC on a continuous basis as required by the various decisions of the UNFCCC. And then we also need to ensure that as you partake in the activities under Article 6.4, we should make sure that the activities actually contribute to our NDC at the same, or also contribute to our low emission development strategies or our other climate action strategies that we have within our countries. So you are actually supposed to submit such information to the supervisory body. We also need to ensure that parties also have a grip, or they also have a say in terms of the crediting periods, because we know there are various thoughts in terms of crediting periods for various activities. So a host party can also submit or suggest a crediting period that it is approved for a specific activity being carried out within its own borders. And then there is also the big issue in terms of enhancing integrity, the issue of corresponding adjustments. We need to have the internal capacity to undertake the corresponding adjustments to our inventories. Once an activity has been done, has been completed, and we have moved the ITMOs from our country to another country. And then all activities that are forwarded to the supervisory body, they have to be approved by the host party. So the host party then has an obligation to ensure that within its own jurisdiction, there's no overlap of activities. For example, if they are land-based activities, just giving as an example. And also that the activity is also in line with their own developmental objectives and aspirations as a country, and doesn't conflict any other things that you are doing within your own borders. Then there's authorization of activity participants. The governments, the host parties have been given the power to ensure that whoever applies or wants to do a project within their own jurisdiction, they have given the final approval or authorization. Then authorization of activity. The participants, this is another requirement also for non-host parties, for those who are going to be acquiring the ITMOs that come from our countries. I'm saying this because most of the African countries, since we are in Africa, we are going to be generating and exporting these ITMOs to other countries. But where they are going, they are also supposed to be recognized. Then we also, as host parties, we may also develop our own mechanism methodologies. Mbaye highlighted earlier on, we have a lot of other people participating in terms of us developing methodologies, but the participation of host countries is very limited. It's limited to non-existent, actually. So we need to be active participants. So we need to build the internal capacities within the host party government, not only governments, but also other institutions, our universities, our research institutions, and other institutions that might be interested and have the basic capacity to undertake these things. We need to promote that within country. And then I highlighted earlier on the issue of application of crediting periods. Again, we need the internal capacity for us to be able to determine some of these things. A renewal of crediting periods, should we renew it or not? Again, it depends on various technical aspects that you are supposed to assess as a host party for you to be able to provide those decisions. So we can also participate in terms of providing standardized baselines as host parties. Again, we need the capacity to do that. And then there are many other things that are required. A host party may request for voluntary cancellation. It may request for a review of a registration or an issuance and so forth. And the host party should have, the DNA should continuously interact with the supervisory body of the mechanism. The roles that are required, there are many. So the gone is the area where you have only one person, the DNA. The DNA needs to have a team. Just from what I've said, it's not exhaustive, but you can actually tell that you need many different capacities. In addition to other capacities that you require in terms of your regulatory requirements at the national level. Because when you give authorizations, an authorization, it's some kind of a legal process, okay? So you need to have a regulation, you need to have a legal framework, and probably you need to have an institution and someone with legal understanding. Then within that, the host parties can also look at the tools that we have as the supervisory body. For example, our sustainable development tool, which is now mandatory for all activities, to be used by all activities. You might need to nationalize that and put it into context into your own country. Then there are other things that are required for a high level integrity. Your grievance and redress mechanism, you might need to have it at national level. It's not a must here, but you might need to have it in order to enhance integrity. You might need also to have the issues related to pre and prior informed consent, and also other issues related to benefit sharing, which were also very topical in the voluntary market and also in the previous regime, that these things were not really addressed enough, especially in the context of many of the African countries. So in a nutshell, I can say these are some of the requirements. Some of them are shall requirements, and then some of them are good to have things that you are supposed to have within your own frameworks. Thank you very much.
Thank you. Over to you, Mukhtarji.
Good morning. We hope that you rested well from yesterday. My name is Mkhuthazi Steleki from South Africa, a member of the supervisory body. Now, as part of the governance that Mbai has spoken to initially, is also an entity under the supervisory body that has to focus on issues of accreditation and processes for accreditation of entities that have a responsibility of having to audit activities and determine really whether the activities generate, a ton that they said they would generate at some point. Yeah. So as the accreditation expert panel, therefore, we have that role and scope to see to the processes necessary. So the accreditation is important, especially for Africa, because of the capacity gaps that Thierry has spoken about, is that we do not have designated operating entities, especially in Africa, particularly the ones, that seek, application through that accreditation, panel process in terms of the procedure followed to accredit them. So that presents a gap, and it has implications for future activities. And we advocate for a strong call for African DOEs, because if we import these activities from DOEs that are in other jurisdictions, that has cost implications, and it may even increase, the costs of an activity itself. So I just mean to foreground that, to say that it's one of the entities for purposes of governance, and part of its scope is to accredit DOEs that have this responsibility of doing auditing or verification and validation bodies, as some of you would have that kind of an understanding. So this is an important process within the framework of Article 6 mechanism. Once an entity is accredited, that is the DOE, it has got various roles, as I mentioned earlier, one of which is to validate and seek registration, but also to verify and certify, emissions reductions. So Thierry spoke here of the importance of environmental integrity. For any system and in any market, you want to promote certainty, credibility, including of the units that are generated, the process that gets adhered to and followed leading up to generation of those credits then becomes important. Then the accreditation expert panel, itself, it has got specific functions to consider, for instance, the results, of the assessments of the operational, designated operational entities regarding their compliance with the accreditation, requirements. So a technical process then gets followed to evaluate really if the applicant entities have the necessary capacity, have the necessary expertise, have the necessary governance, processes within them to be able to carry the task of having to do the verification and validation, of activities. But also added to that is the scope of having to provide advice and also recommendations to the supervisory body. Because of this being the entity of the supervisory body that assists, with governance aspects, it has a work plan. Through that work plan, in terms of the deliverables that it is charged with, it has to put recommendations to the supervisory body, because the decision lies with the supervisory body, and the entity itself serves, under that supervisory body. So those two key, aspects are important in terms of, the accreditation expert panel. The basic requirements, for instance, to become a designated operating, entity, is that it must satisfy certain requirements, and these requirements are provided for in terms of the accreditation standard, but also the procedure that needs to be followed, the 6.4 accreditation procedure, and these are available on the UNFCCC website. There are also forms that have to be filled by the applicant entity to initiate the process, of its application. This enables that we ensure compliance, and that standard and the procedure enables that there's a clearly defined, process that is clear to everyone, that can be evaluated, that can also be improved, over time. There's also requirements, for instance, for provision of banking details, and there's a fee that is, required as well, because to process, applications requires technical expertise, as earlier mentioned, to say that we want to make sure that the technical assessment for these applicant entities is evaluated in terms of capacities and the various scopes we indicated earlier. The expertise, whether they really do have, an office, for an example, and they do have the experts for the scopes that they are applying for, because an entity can apply for a number of scopes. It could be in the area of energy, suppressed demands. There are about 16 scopes. So we want to make sure that through them being subjected to that process, they are really fit for the scopes for which they are applying for. You don't want to realize only later that this entity does not have requisite expertise to be able to carry out, the due verification and validation and verification, procedures necessary and so forth. So the Secretariat then, in terms of the assessment process, would usually, start, it shall start the processing of the application once, received, both application documents as well as the application fee, amongst others. And once the application for accreditation is considered and is complete in terms of the completeness check, further steps that are carried out include, for instance, global stakeholder consultation, desk review documents, amongst others, on-site assessments as well, consideration of on-site assessments by accreditation expert panel, and the mechanisms, supervisory body are some of the steps, that get, followed through. You can see that this is a comprehensive process, and it requires that, an applicant entity invests, time and effort to be able to respond to whatever questions that may be raised following the technical, process. So in terms of the 8th meeting of the supervisory body, Article 6.4 accreditation standard and the procedure thereof was, adopted. To this day, I think there are about, I speak under correction here and will be assisted by the Secretariat when necessary. We've got about 6, accredited entities with more additional to come. And there are approximately about 13 applicant, entities to this date. I think I would have to end there, but to sum up, what we're saying is that there's a robust process to evaluate the DOEs that seek application, that are involved in the verification and validation, scope of this work. It's a process, and we are also indicating capacity gaps in Africa to say that this gap of DOEs in Africa requires, to be improved, or for us to enhance that capacity, because you don't want our activities in Africa to have high cost, that they are associated with the activities. You want DOEs that, are from within the region, that are familiar with the circumstances in the region and so forth. Thank you very much for the opportunity, and back to you.
Thank you, Mukhtar. Thank you. Okay, it's on now. Thank you, Mukhtazi. We've talked about the governance under the PACM, but I think it's also very important that we then look at, bridge this governance with the market realities. And for that, we are joined here by Bjorn Fonden from AUDA, who will then share essentially the private sector's pulse on the market trends, the business confidence, and also the emerging opportunities within PACM. Over to you, Bjorn. Could you please?
Thank you very much, Zubair, and thank you, colleagues. First of all, I want to start by commending my colleagues on the panel, both from the Secretariat and from the supervisory body, for all their hard work and dedication to this process and making PACM operational as soon as possible. As the private sector, we are ready to invest, as you know, and we are waiting for the new methodologies to be approved. It's a Saturday morning, it's early in the day, so I want to start by maybe also asking the audience to do a bit of a raise of hands. So how many people in the audience believe that carbon markets are critical to achieve the goals of the Paris Agreement? Raise your hand. Also on the panel, yeah. Okay, so it seems like we're speaking to a room of already convinced believers, which is great, but we do have colleagues in other rooms who are probably less convinced about the opportunities that carbon markets can bring about to help us reduce the costs and raise ambition in the Paris Agreement. I also want to ask how many people in the room believe that the private sector needs to play a critical role in mobilizing and investing to achieve the goals of the Paris Agreement? Almost everyone. And then my final question, how many, and this is a bit more tricky, how many people think that by 2030, a majority of carbon credit transactions will be PACM credits, Article 6.4 PACM credits? Okay, so one supervisory body member is not convinced. No, that's great to see. Thank you for engaging in my little morning wake-up exercise. So I want to, if I can have the slides on the back, just to briefly share, AITA is a private sector association. We have around 300 business members all over the world, including the standards, the product developers, the investors, the buyers and traders in carbon markets. And we were established already in 1999. So those who think that carbon markets is a new concept, well, we've been around for more than 25 years. And so what we are talking about now is really the new era of carbon markets. And as an association, we believe that they will need to play a critical role, again, in reducing costs and helping us achieve net zero, because there's no way to meet net zero targets without removals, without reductions and carbon credit markets. So these are just some of our members. I'll jump through so we have more time for discussion. But one of our special initiatives, the Business Partnership for Market Implementation, specifically supports emerging markets and emerging countries in developing effective rules and frameworks to engage both with compliance carbon pricing systems, voluntary carbon markets, and international carbon markets under Article 6 of the Paris Agreement. And specifically here in Africa, we've been working closely with the West African Alliance, with the Eastern African Alliance, to support countries in the region, to build capacity, and to make sure that the private sector stands ready to invest in these projects here in the region. Because we all know we are off track to meeting global climate targets, and it's important to set this context, what we are talking about here today. And the IEA has clearly highlighted that stronger ambition is needed in the next round of NDCs that needs to be submitted ahead of COP30 in Belém this year. And carbon markets are really there as a tool to allow for increased ambition and to enable net zero. We know that most countries, and also now a majority of large listed companies globally, have set net zero commitments, but they need carbon markets and carbon crediting instruments to actually be able to operationalize and to meet these targets. So the question is, how do we do that with high integrity and supporting local communities, indigenous peoples, and the people on the ground that are developing and working on these projects? Africa itself as a region is facing massive climate finance barriers and gaps. If we look at the current flows, it's around $52.1 billion annually. This is from 2024 figures, whereas the needs are more than $280 billion. So we need to more than quadruple our climate finance to Africa annually to meet the existing NDCs, not to talk about increasing ambition in the next round of NDCs. And AITA has conducted a study together with the University of Maryland, which shows that Article 6, if fully implemented, could help to bring $250 billion in cost savings annually by 2030. But it means that all parties, both buyers and sellers, host parties, needs to engage and needs to be able to proactively participate in this market. And across the region, we know the carbon markets are still shaping up. I won't go through all the numbers. Many of you are very familiar with the situation. But in terms of private sector flows, Africa is still the one receiving least climate finance mobilized from the private sector, of only 18% compared to other regions globally. And the VCM, the voluntary carbon markets, in the past 5 years have mobilized more than $5 billion and has a strong growth potential, particularly in many of the African countries, which so far has only issued 13.4% of global credits in the voluntary carbon markets. So in 2024, we saw around 50 million tons issued from African nations, and only 25 million tons retired, which is far below the market potential and ambition. So the path forward here, and what we're talking about in these last few days, is really how do governments and parties here in the room, together with the private sector, work to unlock the scale and to ensure high integrity credits that work for both the governments and the local communities involved. What we've been talking about here is that Article 6 is now ready for business. Following the decisions at COP29 in Baku last year, parties can no longer refer to the rules not being finalized, to the uncertainty from the negotiations. It's time to move from negotiation to implementation. And that's why we're brought together today to discuss the critical issues around how we do that together. Under Article 6.2, we already see cooperation ramping up very quickly. We are tracking all the bilateral agreements on our website. This is publicly available information, so feel free to look into it. And you can see many of the buyer countries that are signing now agreements with several host countries, but only part of them, of course, here in this region, and many also in Latin America and in Asia. And under Article 6.2, we know that voluntary carbon market standard or independent crediting programs are mainly still used for the transactions, whether it's Vera, gold standard, or other crediting mechanisms. And as governments, you are in a position to approve and to authorize these projects and bilateral cooperation agreements. And I think what's critical here, and we have prepared a paper I'll show later, is really thinking about your process for authorization, the frameworks in your countries, how you think about the sharing of proceeds or benefits from these issuance fees or from the projects and the credit revenues, and also any buffers and changes or revocations that will be applied to the letters of authorization you are giving to project developers. Because the demand is growing. We've been hearing yesterday a bit about Corsia, which so far, if you look at the graph, is really the main demand if we look ahead to 2030 of around 460 million tons, whereas you look at sovereign buyers such as Japan, South Korea, and Singapore that have outlined their demand for ITMOs, or Article 6 authorized units, and that compiles around 200 million tons ahead of 2030. We already discussed that many projects have submitted their notification, their prior consideration notification, to register under Article 6.4 and the PACM, and the private sector sees major opportunities with this. We did a survey last year with more than 100 companies globally, and most of them said that they are interested in participating in PACM and potentially transitioning their projects from existing crediting programs because they see new revenue streams, new, stronger environmental integrity, a risk mitigation by having the stamp of UNFCCC and the approval of the host country, and technology cooperation, which is expected to also drive prices higher on average than existing credits in the market. But of course, this depends on buyers in the market being interested to procure these credits, as well as the process actually finalizing the rules and the standards so that new projects can be registered. And a critical piece, which hopefully we can bring up in the discussion, which we have seen recently, is the discussion around the removal activities under 6.4 and the standard on non-permanence and addressing reversals, which really has critical implications for project developers and for Africa as a region. because the risk is in the current draft standard. Of course, we had MEP last week, so we're expecting to see a new draft standard. It would be unworkable for project developers to actually develop land-based activities such as ARR or agriculture projects that are focused on removal under 6.4 due to the stringent requirements around project monitoring, which lasts hundreds of years, which is not feasible for private project developers, and very stringent criteria around the risk of reversals and how those are being defined. And we call on parties, also here today, to engage more proactively in this process. Because if the rules that are set by the MEP and then approved by the SBM are not workable for your countries, you have to be there, you have to engage, and you have to provide your voice. So very happy to speak with you further about this issue. So just to say that looking at these different opportunities under Article 6.4, companies are highlighting agriculture, ARR, CDRs or carbon dioxide removals, as well as cook stoves as key activities of interest based on our survey from last year. And a majority of buyers are willing to pay higher or significantly higher, which is more than $10 on top of average market prices for ITMOs or authorized credits. Of course, because the use case is much stronger, whether it's for CORSIA, for NDCs, or potentially also for voluntary retirement by corporates. However, the uncertainty from host country frameworks, and this is where many of you come into the picture, around the infrastructure, registries, approval processes, fees, and authorization lists remain as key barriers for private sector to invest. So we published this paper just in June, which highlights how countries can integrate Article 6 into the new round of NDCs. Many of you hopefully are already finished or more or less finished to soon approve and submit your NDCs. But if you haven't already, please consider looking into these very simple steps and the checklist to signal to the private sector and to other parties that you are ready and you are willing and you're intending to participate and use Article 6 to actually help you reach your targets and to raise your ambition. I won't go through all the steps because we have limited time here today, but we want to move from the foundational readiness, which is the step one, speaking about the intent to use Article 6, to the enabling readiness, where you have the robust accounting and reporting infrastructure, the institutional arrangements, to level 3, where you're really ready for the market to invest, where you have clear authorization processes, forms, letters of authorization templates, strategies for benefit sharing, and long-term alignment with LT-LEDs and your national climate change strategies as discussed. Finally, I just want to highlight another initiative which we are working on as AITA together with the World Bank and the government of Singapore, which is the Climate Action Data Trust. This is a public decentralized metadata infrastructure for carbon markets, which brings 16,000 projects and 3.8 billion issued credits from existing registries onto one data dashboard, which is online right now. You can search for it, just Climate Action Data Trust. You can see all the projects, all the credits, and we're hoping for host parties here in this room, when you set up your national registries, to also connect to the Climate Action Data Trust through a blockchain API, and you will be able to also include then your transactions from the country, whether it's 6.2 or also voluntary transactions, to be showcased at the international level. So with this, I'll just stop here, and I'm happy to take questions and discuss further with my colleagues. Thank you very much.
Thank you, Bjorn. At this point, should we just try to make up for the lost time and actually go back to the agenda, which is at 10:30 we can go into the coffee break, and any questions that we have, we could carry those discussions forward over coffee. We can come back at 10:45 and then move on with the next session, where we are going to talk about de-risking carbon market investments. Does that sound good? Sorry? Oh. Yeah, okay. 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 Does anyone have questions for now? Maybe we can take a few and then carry the discussions further outside or here. Any questions? Yes, Mr. Ahmed.
Mike.
I'm sorry, you'll have to walk to the mic because of the audio setup, we can't just give the mics around.
Good morning, this is Ahmed Badr from Irina. So actually one of the reasons that I came to this important event is to ask this question. How do the supervisory board members here can see, because I've been listening carefully about hundreds of applications that have been submitted. How do you see this percent move into real transaction in the ground? In real terms, because this is very important. I am a banker by definition, so I do see that supply is coming very quickly, but what about the demand? We need to have realistic thinking, at least for the renewable energy. I understand that renewable energy might become approved as a methodology, but in real terms, how do you see that helping in the market transformation? Thank you.
Yeah, thank you, and thank you for your question. We have often this question when we will have a project and transactions. Just to clarify, the Paris Agreement crediting mechanism, the Article 6.4, is not a mechanism where we'll have transactions. It's a crediting standard. Registrating project, delivering units that have very high integrity based on all the rules and the UN rules. But when you do the transaction, you'll go under the 6.2, where the transaction will happen. Under this mechanism, it's just you register project, you implement the project, you monitor the project, verify the project, and deliver units that are certified with very high credibility. We expect from this year, from next year, to start generating those units, because we have already some projects that are registered. Most of them are CDM transitioning project. They came from the CDM. They are now 6.4 project. They may deliver units with this mechanism. With the new methodologies and the revised methodology, we expect to have, at the end of this year, project may register from next year in this mechanism. And only after they are registered, implemented, they can deliver units. In the meantime, the transaction may be done only with those units already generated, whether under the CDM or under the transitioning CDM project, or under the voluntary carbon market, the independent standards that have delivered the units. We can expect having units, a lot of units from the 6.4 only in 2 years, for example.
Can I just add super quick? Just a super quick comment on that. I think there's a supply-demand mismatch, right? You have an oversupply of certain types of projects and credits, but you also have a demand, which I highlighted, the Corsia demand, for example, which is actually not seeing a supply of eligible units. And the main bottleneck, apart from eligible methodologies and standards, is really the host country frameworks and authorizations that needs to be provided under Article 6.2. So that's what we as private sector, and I think, again, urging colleagues in the room to really move ahead with providing LOAs for high integrity projects so that we can unlock this potential of the market.
Yeah, thanks, Ahmed, for that question. Like, I think one is in terms of the supply demand balance, but what we have historically seen is like, I'm just going back from where we started in 2005. Like, I have quite a number of colleagues who are here, where the countries have taken a rampant increase in the renewable energy uptake, right? Like, the carbon markets, as designed as we have right now, this is more like, you come from a banking sector, it's more a results-based financing tool rather than offering an upseed capital funding or capital seed funding, right? So it acts as a catalyst to fasten the transformation to happen. Whether or not it can completely shift everyone to invest into a particular solution, like we have seen in the past, like in countries where they were lower uptake of renewables has moved. It's also thanks to the cost of production of energy through renewables have come down significantly, thanks to the work and which the regular reports that you prepare make sure that this is there, right? And carbon markets also work with the foundational principles of them being not business as usual. I'm not saying that like still there's a lot to be done. We have to triple the renewable energy, double the energy efficiency even within the process. And how could this market can facilitate that? And what we are seeing is like three kinds of trends that's happening from the supply side. One, purely like standalone grid-connected renewable energy activities coming from these carbon markets, and there is not much of an uptake happening unless that it is coming from non-G20 countries, to be honest. The second bulk of projects is like renewable energy projects with, for example, with storage or with high-end products that is generated out of like whether it's green ammonia, green hydrogen, using renewables or renewable energy with storage, is where, again, you could find some kind of uptake in terms of activities through carbon markets within the G20 spectrum. And then cutting across what is happening is like, even if you take, for example, India, we always like, I don't need to say where it comes when it comes to renewable energy, we always talk about two types of potentials, right? We talk about a technical potential, and we also talk about a gross potential. When we talk about the technical potential within the renewable energy, we always talk about how much, with the reactive power of the renewable energy, how much the grid can take in, right? And we are seeing quite a lot of carbon market investment slowly coming up in terms of expanding and making the grid available in order to take the reactive power renewable energy into the grid. And that's the third set of streams we are seeing. And the last one is more about, like, still like you would have heard from many people, like I think in the first days, in the implementation lab, someone said that we still have quite a number of population who do not have the basic affordable needs on the Maslow's need hierarchy of energy supply, which is at the bottom of the pyramid. And there we are seeing the rural electrification type and off-grids and isolated grid types of projects picking up as against fossil fuel. So from a renewable energy spectrum, and you also talked about the rare earths and minerals, which is coming, finite minerals, right? So this is the breadth of the supply that could possibly come, and the supply segments are coming from here. Now, where does this demand coming from? And what we are seeing currently is, like I think Bjorn talked about renewable energy, and quite a number of standards, like where they have had put an embargo in terms of renewable energy for certain capacity levels, or beyond a certain capacity level, they don't want to take it into the carbon market. The demand, for sure, like I think Joanna will be talking later on supply demand and where this demand comes from. We did like our estimation. For example, if 5 countries fail to reach their NDC targets, the demand would just jump around what Bjorn has shown is in terms of around the buyers that they are buying, 240, of which what we explicitly know is some countries wanted to use it for their NDCs and others, they are doing more beyond their NDC compliances. But our estimation is with 9 countries and 5 countries with that balance of if they do not meet their NDC, what will be the demand by 2029, 2030, which we have a dedicated session on supply and demand. And our estimation, if 9 countries fail, from the developed world, including, no, not only developed, a couple of other developing countries, the demand goes to 1.3 gigatons, which is equivalent to almost what CDM supplied for the whole Kyoto Protocol KP1 regime, which is 1.27 billion. I don't want to make fake promises, but I'm saying like where the demand comes from. If people are true to what they have committed to do, what they want to do under the NDCs, there is a demand that might come from there. And with CORSIA, as usual, like what we have on papers is that of the CORSIA demand. This also works with, it works with the mid-recovery scenario, and I'm praying that to God that we don't have something like what happened in 2020, right? Like the CORSIA was supposed to deliver about 120 million tons between 2021 and 23 to create demand, and their emissions have only reached to 2019 levels in 2024 or early 2025. And that's where the demand has dropped, but that will be the next demand center, as he was saying. The third, I would see the demand there where comes from, and I've been repeatedly saying, like when I put my hands up for the PACM, although like I'm deeply attached to PACM. No, I am also attached to 6.2 and other independent standards and bilateral cooperation, but PACM is something, okay, I will not say. Bjorn will tell me what is PACM is all. It sounds like how, yeah, I'm more attached to it. So in PACM, I think like most countries, like I think we have an NDC 3.0, right? Like we have a basic foundational principles in Paris which says that we all have to be more ambitious. We cannot backtrack. It says it has to be progressive in nature. As we move forward, I see that like end of 2030, when we come for NDC 4.0, we almost hit to a time where quite a number of other countries, we are hearing from some bilateral announcements coming from a joint declaration that came from when EU was there in China, where they said they would be possibly, we are not, I don't think any Chinese colleagues are here in the room, but they did say that they would include all gases and all sectors into their next round of NDCs, right, as compared to what they had as only CO2 in the first round of NDCs. So as we move more towards that, more countries wanted to retain the reduction limits, and that's where I think Bjorn talked about technological transformation and quite a number of developments that's happening in the renewable energy sector would contribute towards that MCU contribution. Like it links to the finance, the 1.3 trillion, countries wanting to achieve more, and to find the right balance between the recognition for channeling those finance in a more effective and more transparent way of looking at those impacts of those investments. And I think that the MCU market, I'm saying loosely term as mitigation contribution units, but there could be, you can also call it as voluntary credits without an attribution or claim towards different claim categories. So that's the fourth thing that I'm seeing. Like the traditional countries that wanted to have additional demand beyond their NDCs, 9 countries drop of NDC, CORSIA, and MCUs would provide. But will it provide to the scale that we are expecting? That needs to be seen. So there's for sure that there is demand is a question. And that is where the PACM provides, right? Like if you want to have the right market signal, I don't want to dispute with my friend in terms of the reversal standards, because if you ask me a philosophical question, like do you want to engage in a market that you want to sell units which are impermanent and which are of lack of integrity, every one of us would have put our hand and say no, because all of us are working on common objective and each sector has its own challenge. I fully agree that we have to make sure that no sector is left behind. But we are all working with an assumption that what we are allowing somebody to emit today is being used to compensate for them to emit today, because it's all about asking someone to emit today for that equivalent amount that we are trading. So it is that the PACM provides that integrity, and it is not about the standards being stringent or standards being ideal. It is making sure that the supply comes to this market is of the highest quality and integrity, and it can attract the right price in order to bend the investments to go towards more where that it is needed. Right? And I'm not saying that like the removal standards is great or it should be ignored. And I think there will be a lot of conversations that we would happen, and we recognize that the principles that which says that the risk of reversals needs to be negligible for an any project. It's not only limited to reduction removals, right? It's for reductions and removals. You need to make sure your risk of reversals are negligible. And how do you demonstrate that is like different methods, and I hear that there's a proposal that you need to see everything together coming up. But even if you look at the new revised standard, it says that you undertake a risk assessment, and depending on what is your risk, you then contribute, how do you ensure permanence, whether if it is a larger pool to the buffer, or you have to take more insurance, you have to have a blended insurance plus buffer plus other parts of doing it, and whether or not you have to differentiate between willful and unwillful, or I would say type of reversals, right? Like, and then its relationship with IPCC accounting, which Stefan was talking about on our flu sectors, how this is being accounted. There is actually a trump card there behind, which I will not say. There is a possibility in how to engage with those markets. So for sure that there is a demand and the supply, and I think the PACM will provide high quality, or PACM will drive the market to supply. I'm not saying only PACM, because the KPI of PACM is not that how many credits have been supplied from PACM. Because when I put my hand by 2030, that PACM will supply more, I will come with a KPI indicator saying that how many standards outside has actually aligned to PACM, and they are issuing those credits, right? That I will account as a PACM outcome. Because it's not that how many projects are under PACM, but how many projects outside are influenced by the PACM rules is what the KPI that the parties have to look at. So I think it is both the sides of, it's not just the volume, it's about the volume that remains within outside in the market is how much is aligned to that of the principles adopted by the parties under the Paris. So that's where I put my hand, that PACM will supply more. It's not the absolute numbers from PACM, but how many units that will be available, which aligns with the PACM, inclusive of PACM.
And you need also to bear in mind that when transitioning, we will have many transitioning CDM projects into the PACM at the end of this year. And those projects will deliver units coming from 2021, because there are already projects that are implemented, and they are waiting for all units generated from 2021 to now to be just issued. When they are in place, you will have also a supply coming from those units. And lastly, also, I wanted to say that this mechanism has first the stringent rules, the baseline, the additionality, and all of that. But also, what is new, and Terry raised that issue, is the sustainable development tool. Now it's a mandatory for every project to demonstrate that the project fulfill this tool based on the SDGs. And it's verified by a third party. That makes this mechanism more robust. And also you have a grievance and appeal system within this mechanism. People may appeal and have grievance when the supervisory body took some decisions. And lastly, we have this benefit sharing between the PP, the country, and the communities. Thank you.
Eduardo? Yeah. Can you kindly go to that microphone there?
Thank you, and I'm sorry I'm going to take the floor now. And I apologize that I couldn't be here yesterday for some flight delays. Anyway, I just want to congratulate the panelists. They have provided a lot of information that is very important to understand this transition that we understood from the CDM, and now we are moving to the 6.4, which is go beyond the private sector, because the private sector, we all agree that they want to play a role, and that's fine. But also the host party need to understand their obligation. And I'm still finding out difficulties within DNAs to understand difference about letter of approval, letter of authorization, if they have to use a DOE, if they don't have to use a DOE, if the new methodology, for example, I mean, you are probably trying to approve a new renewables energy methodology, if that's going to affect the ones that are transitioning from the CDM to the 6.4. all this confusion are still there. But I want to bring something which I believe is very important, and this is for the host party, which is key element. Now, they probably will provide with the approval letter, just to give the approval to the CDN transition to the 6.4. But then it will come the authorization letter, which is something else. And the authorization letter, once it's given, it immediately triggers the initial report. That is my understanding from this capacity building. And you mentioned it very clear and by that the 6.4 is just a registry for not for transaction. The 6.2 is the one that is made for transactions. But it doesn't seem that everyone is still understanding that. Everyone is still believing that once you get the authorization for 6.4, it immediately could transfer your credit, and that is not the reality that at least from CFRN we are understanding. And this is a key element that I guess, I know you are from the 6.4, but we cannot just be away from the reality of 6.2, just to avoid this confusion. And this is something that is important to everyone to know, because from our perspective, the DNAs are still struggling with these authorizations and approvals from 6.4, then they will have a different authorization from 6.2, which is two different bodies, let's call it in that way, and that is the most important. And I also want to make an appointment. I know that the methodological panel were discussing about land projects, land-based projects. Of course, we are one of from CFRN, we are still believe that everything related from forests, I'm not talking about agriculture or other ones, has to be dealt from 5.2, which has all the rules, modalities, and procedures approved. It took 10 years, which is the RED Plus, trying to, and you mentioned it very well, avoid avoidance, because all these methodologies that were from the voluntary market regarding to forest or RED Plus were avoidance methodology. So this is just to also bring some clarity for everyone within the group, that because you know that we are being pushing this, and now there are some clear rules. If you want to implement one of the 5.2 activity, you gotta follow all these 5.2 rules. Thank you.
Okay. Good to see you again, Eduardo. But in my presentation, I think I forgot to touch on one thing, that there is actually a manual, Article 6.4 manual, that has been prepared and is available for use by the host parties. And then, as we all know, the capacity building program is still ongoing, and then also our regional collaboration centers are always there to also assist in terms of capacity building for host country parties. I would like to hand over to Baye for further.
Yeah, just about the 6.4, the Paris Agreement crediting mechanism. I clearly stated that it's a crediting mechanism, generating units that you can use whether for transaction under the Article 6.2 or use in a voluntary market as MCU if they are not authorized, or you can use it for result-based finance for many other purposes. But the advantage of this mechanism compared to the other standard is it's a UN mechanism. And all the rules of Article 6.2 are built under the UN. So the Article 6.4 is built in a way to meet all the requirements that are needed in 6.2. So meaning the units generated may immediately be transacted, meeting all the guidance that you have. It's why you can provide the authorization directly under the 6.4, allowing the units be ready to be transacted immediately. That's the main difference. While when you have another standard or you have a bilateral agreement, You, in addition to the generation of the units, need to meet each of the guidance that are under the 6.2. That's the advantage you have when using 6.4 units or project under the 6.2 transaction. Thank you.
Yeah, thanks. I think Thierry and is covered. But I think thanks for that question, Eduardo. Always come with an interesting questions. So I will take this because I think it's also I'm taking this as an opportunity to convey to the parties in the room. So I take that as an opportunity. I had an opportunity to talk to some of the DNAs separately yesterday evening in terms of the exactly on the point between approval versus authorization. So I wanted to clarify something for the parties or the states who are here represented, right? So what is decided in Glasgow is that the approval for the transition has to be provided by the 31st December 2025, not the additional information that needs to be submitted along with that approval, A. B, it is not asking for authorization. So that's the thing you have to remember. So it is an approval for that activity. You are in principle in agreement to approve those activities to transition, right? The conversation that you need to have, like I think we have colleagues from Brazil here, we don't have colleagues from Chile here, which are the two new sets of indication that we have got about the approvals, right? So, and they have had a clear conversation with their private sector saying that an approval doesn't constitute an automatic authorization, right? Because this is, we have an internationally agreed deadline. We don't want you to miss your investments that you have done, but we are still evaluating whether we will allow this to be used for a compliance purpose or a non-compliance purpose. Then comes the authorization, right? So these units, assume that like you have approved these units, they come with the additional information, and when they have to be authorized, again, thanks to African group, we are here. Under 6.4, there's one requirement, Eduardo, which is like, you have to provide a statement of authorization, which is paragraph 42 of the rules, modalities, and procedures. Within that, you can indicate at what time period that you as a host country is intending to provide that authorization, right? So we started with at registration in Glasgow, and then African group again fought and got in 2022 in Sharm el-Sheikh to move it prior to the issuance. And then in 2024, they were successful to make it post-issuance, right? So time being, like when a letter of authorization is being provided, at the time of this activity is being approved and the additional information is given for the time of the issuance, all the host party will do is to choose by saying that I'm still deciding, right? Whether it sends the right market signal, right price, I'm not getting into that discussion, because the more you delay, you will also find some problem with having the right buyers because of the demand that is, like the demand is also time limited if you take CORSIA. So then the country can decide, like at the time, whether they wanted to give it at that point in time or at the time before the issuance is being provided, at the time of the issuance that they can decide to provide. Obligation of initial report, right? The time that it is being approved or issued, right? It's not needed, because what our decision says is that you have an obligation to submit your initial report by no later than the first transfer. So the first transfer yet is not happening, because that is one of the reasons why, even though there is a delayed authorization that's possible under 6.4, we are not even moving the units from the pending reissued account to that of the adaptation account, because that constitutes a first transfer, right? So then you cannot change the fate of that unit to an MCU, to another unit class, etc. That's a technical weed, but we are taking care of that by making sure that what you have politically agreed in terms of the flexibility in the timing matches to that of the first transfer. But what we clarified in Baku is that yes, that you have to have in the components of your authorization, you need to have the components covering three aspects, right? It includes the cooperative approach, it includes the entity, and it includes the ITMOs. So that we have agreed. Then you talked about two different authorization statements, right? So 6.2, what to contain, because as always, UNFCCC is always a boring paper with blue color slides, right? You never find like AITA very engaging slides, because we are kind of like, we have to limit to what we have to do. So we are always with blue slides with white text. So similar way, the Article 6.4 authorization template is a mandatory template, but the contents of that authorization statement comes from what we decided in Baku as a shall requirement. That remains the same for Article 6.2 and 6.4, right? The shall requirements of what should contain is still the same, but how it is presented is different between 6.2 and 6.4 depending on what you wanted to use under 6.2. There's no mandatory to use a standardized template. But in 6.4, when you submit to us a request for issuance or a first transfer, we will not be accepting an authorization letter that is not published by the supervisory body as the 6.4 authorization thing. On the last one on red, again, thanks to you. You know very well, and again, I wanted to use this opportunity to communicate to everyone here that I know that there's a lot of interest in the land sector or forest-based credits, because of the influence from the CFRN and particularly on forest community. We have a very famous paragraph 87 of the methodological standard, which says that if your activity that you are undertaking in forest can be an eligible activity that is defined under the decisions, CP19, am I correctly saying? Yes. CP19 decisions, if those are the eligible activities, you as a country will not be able to engage in a 6.2 activity. In 6.4 it has been said, but I'm sure that 6.2 will also pick that up, which is that unless that you have a RED Plus strategy submitted to the host party, from the host party to the UNFCCC, you have not submitted your national forest reference level, and if you have not followed all the safeguard mechanism that you are talking about is being fully followed, and we fleshed that out again in leakage standard to make it sure, and also this information should be available in the Lima hub before you can actually undertake a forest activity under Article 6.4. So that's where we found the clear link between Article 5.2 and Article 6.4. And now under Article 6.2, if somebody is doing an independent crediting standard, and if that country doesn't have a national RED Plus strategy, it has not submitted a national forest reference level, how it needs to be treated will be an information question that will come out of the Article 6.2 review, and the market may correct it, but we don't make a control, right? So that's the difference between when MBI said that it is under UN system, it is not just the UN stamp, but is who else has much more authority to make sure and ensure to the market to provide that market signal that this is fully aligned to the Paris requirements, be it alignment to NDC, LT LETs, requirements under Article 5.2, requirements under Article 6.2. Who else other than this body would be able to provide? And that's where I think we always have that USP, and we have to see where the market moves. And thanks for that question. So I also took this opportunity as more as a capacity building to talk about a difference between approval and authorization, timing, the contents of authorization, the time period in which that you need to provide the initial report. And the biggest advantage of 6.4 is also that if you are a country, you have 5 bilateral cooperative approaches, or if you are engaging with one single standard, but you have 10 activities addressed to a particular demand, you are obliged to submit 10 separate initial reports. Whereas under PACM, what you are engaging is your cooperating partner is the multilateral mechanism itself. So that's where you have an open demand. You are not bound by you are just that partner, but you will be able to sell your credits to all the 190 with one single initial report, and you will only update the part 4 of the initial report for each of your activities when you authorize for NDCs. But for other purposes, no. That's the advantages of PACM. So you know I'm a better salesperson for the PACM. Thank you.
Okay, thank you for the clarification. I think it's necessary for everyone, especially for DNAs, to understand the whole process, no? Because I know they are still struggling to get all these different steps in place, no? Just one more point. Now everyone is talking about 8 months, and 8 months are generated through 6.2. That's clear for us, not through 6.4. That's something that still, I know this AITA friend is moving away, but that's exactly a different interpretation that are still around. For us, the IDMO will be generated under 6.2 once you follow all the process and authorize the first transfer, blah, blah, blah. And that's the point that I'm trying to raise also, because once you have an authorization letter for a mitigation outcome, which last time in Bonn we called them AMOS, that doesn't automatically means that is a need mode until the first transfer is defined. And that goes to the registry, to the international registry, if I'm not mistaken. So just allowing to transfer units from wherever they come once they are authorized or from the credit mechanism without completing the initial reports, putting disadvantage, a totally disadvantaged position to developing countries when they need to apply the corresponding adjustment and to find out where they are exactly doing versus their own NDC. And this is important also for them. It's not just giving a letter of approval, but then you see the NDC, blah, 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 it's something else. Then at the end, when they report everything in the BTR, it's a mess for the developing country. And they are actually owing mitigations outcome because they sold them. This is what I want to bring to the attention of the DNA, because they need to have all this in consideration. The only way to see of this element is through the initial report. And that's important. And to create ITMOD from our perspective is through the 6.2 mechanisms. Thank you.
Before Perumal complete on the BTR, just to clarify, is what I said before. You are right, all the transactions are done under 6.2, but as I said, the units generated by the Paris Agreement crediting mechanism, when authorized, meet all requirements that are needed under 6.2 already, because the system is built in a way to meet the Paris Agreement Article 6, all the requirements. So while for another standard, whether it is a bilateral or an independent one, when it comes to the review, we may find that units generated by that standard or the bilateral agreement doesn't meet the criteria. So there will be inconsistencies found by the review. While we are sure if the units are coming from the 6.4, you already, it's built in a way to meet all the requirements. Very much.
No, you're absolutely right, Eduardo. Like, I think that's what, like, I think we do have that, right? Like, you remember very well when we failed all through, we tried to define what an ITMO is, right? Like in Madrid, we failed because we tried to define in one sentence what an ITMO is. Then again, we failed in Madrid, Chile. So we decided, okay, let's go to Glasgow and we describe what ITMO is, right? So we moved from definition to a description. So decision 2, CMA 3, paragraph 1, the last bullet point is what which says that what does the ITMO means, which says about real, verifiable, additional, la 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 la. And the last one says authorized A64 units coming from PACM is also defined or described as an ITMO. So that's the confusion that like we are trying to avoid. And you asked about AMOs, like, and I still remember that time everyone's eyebrows went up because I think I'm seeing Sandra because I'm also seen her same eyebrows goes up in Bonn that time, right? No. So this is some countries, like again to meet CORSIA demand, they thought that if we are going to tell them that everything that you are actually doing has to be authorized from the beginning, or like we have 3 timelines, right? This is paragraph 2 of the decision 2 CMA 3, which has given the flexibility for other international mitigation purposes. So there's one particular country which is no longer part of, which will become no longer part of the Paris Agreement at some point in time, wanted the flexibility to be offered to CORSIA market. Because if you say that by authorization that you need to provide an corresponding adjustment obligation to a host country, then countries may be reluctant to sign it off. They might want to wait for a long period of time, right, to know. And then we said issuance, and then we have cancellation. But where we are fortunate is that most host countries, when they have decided that this is for Corsia, all of them are invoking their trigger for a corresponding adjustments as authorization. That is saving us quite a lot. The moment people start using cancellation as the trigger, we are going to be in a mess, right? But that flexibility was there. So that country or that particular party and a group of other parties, they felt that there has to be a classification in between a mitigation outcome, which is issued by any standards. I'm not just saying PACM. Any standard that issues an outcome is a MO, which is the mitigation outcome. And then somebody said like, okay, what is actually a first transfer that we defined is at the time, like when you do first transfer is when it is actually becomes ITMOs. So they wanted something in between, and that is what in Baku came up with something called as the AMOs. It is an authorized mitigation outcomes, which are not yet still first transferred, right? So what they wanted to provide that is as part of the cooperative approach. If I am from country A, I say that like the maximum limit that I wanted to authorize are from A, B, C, D, E for the purposes of Corsia to be used by airlines A, B, C, D, E. This is the maximum quantity I am authorizing. And then the moment I first transfer, then that becomes an ITMO. So this gives kind of an assurance to the market players in between, but it will have a complication if you really look at it. But that is the reason why that in the AEF tables, one of the action tables that we negotiated in Baku includes as one action as AMOs to record. And finally, I will stop by saying that why PACM again is more easier to do is that because you mandated us to provide an pre-filled AEF, a pre-filled initial report, a pre-filled regular information, making standardization of everything that you would go into the technical expert review is pre-filled and given it to you for you to make a formal submission. There are elements related to your NDCs that you would be filling in, but anything that comes from the requirements related to reporting will be captured there, right? And then I could also see quite a number of people here who have already taken the review processes and review examinations. And you, like now we have more than 190 experts now to undertake reviews. We have moved from 70. We just recently had a training and 110 people have qualified. So we will go to the next round of the reviews, right? The only difference is that I'm very sure, like again, like proof of the pudding is in the eating. I cannot pre-jump and say now 6.4 reports will have less inconsistencies, right? You have made sure that now we have 27 indicators of identifying material inconsistencies within your review process with just 7 paragraphs, with 7 sub-bullets in 1 paragraph. You have given us 27 indicators, and we are publishing the new review template, and you will find 54 indicators, of which it will capture with the additional information, which is the appendix 1 of the CMA decision in Baku. You will find a startling difference between the reporting gaps between 6.4 and 6.2, right? So I'm not trumpeting that 6.4 will make everything simpler and life simpler, but I think that's what the confidence in the market is given, because like once you have engaged in a cooperation and then you identify so much inconsistency with red lights blowing on inconsistency, because we are also planning to do that if you have identified as materially inconsistent and persistent inconsistencies, they will be flagged in a separate color in the review, the CARP page, right? So that will give the market, like I'm not saying that we don't have any business to qualify the cooperative approach or make any kind of a decision on whether or not this is a good cooperative. It's all about information and reporting. Based on what you provided as an information, if they have a material inconsistency and persistent inconsistency, they will be separately tagged. The moment you look at that cooperative approach, it flashes on your face, right? Thank you.
Thank you. This conversation would not have happened over a coffee. My bad. But I know that we've kind of gone over time on this one, and that may actually cut into the time we had for some of the next sessions. But what I can promise is that the overall duration will stay to 5 o'clock. We'll just play around with something, so I would appreciate your cooperation here. Now we can go for coffee, right?
Okay.
Yeah, okay. And when we come back, load up on all the caffeine, because we're going to discuss all about finance its demand, how do we get into the supply side of things, and also on the demand determinants as we go forward. All right, see you outside then. Thank you. All right, all the participants, remember how yesterday I told you that All right, everyone, welcome back. Hope the coffee re-energized you, because this one is going to require a lot more of your brain cells and highly functioning ones. Now, unlocking finance, right? That's been one of our ongoing themes for this event as well. And unlocking finance for carbon markets means addressing one of the biggest hurdles, which is how do you address the risk? And this session is going to dive a bit deeper into the risk part of it and the essential financial tools and strategic approaches that make carbon market investments more attractive, less risky. And from, if you think about the guarantees, insurance products to blended finance models, what have you, and most importantly, the more enabling regulatory environment, we've tried to put together a panel which represents the private sector, private financial sector, may I add, and then we've got AfDB. You are all no strangers to Olufonso. So AfDB as a multilateral organization, intergovernmental organization, and then we also have Irena with us. Let's first start with Juana. Juana is the Vice President and Carbon Markets Lead at Morgan Stanley Capitals International. That's correct, right? I always get the MSCI explanation, the unabbreviating it wrong sometimes. Who will give us a more macro perspective on the integrity narrative when it comes to carbon markets. And then we'll hear a bit more from Olufonso to talk about the African Development Bank's carbon support facility, or maybe some other initiatives that you also have in mind. And then we'll get into a discussion where we also have some queries based on what Mr. Ahmed shared yesterday. Okay, so I won't take much more time. Over to you, Juana. Thank you.
Good. Thank you. Could I, yes, exactly. Could I please have the slides? Well, first of all, thank you to the Secretariat for inviting us to participate in these key discussions, and I want to echo Bjorn's words of appreciation and congratulations to all of you that were part of agreeing on the Article 6 mechanism in Glasgow and all the rule book. Reaching agreement last year gives a lot of a good signal to the private sector and needed security to step in and invest in Article 6 aligned projects. Of course, there's still a lot to do on national rules and regulations, which I know you're putting a lot of work on, and yeah, so congratulations. Who are we? So we are MSCI Carbon Markets. And in MSCI, we focus at providing data intelligence with a holistic view of the market. We covered corporate data, more than around 70,000 companies. What targets are they setting? How are they using credits to meet these targets? What is it forecasted that they will need in the future to meet these targets? In policy, in pricing, we have recently launched our price indexes, which we have at the different project types. We also have it depending on our quality rating. We have an offtake price tracker and another project-specific pricing information. On our forecasting, we forecast supply, demand, and prices up to 2050. And we also have forecasts as specifics by project type and regions of development cost and other important cost models. In policy and guidance, we have over 40 country profiles that cover general regulatory environment of the country, their compliance systems, and other information from the supply and also from the demand side. And we have our Article 6 offering here, in which we track Article 6.2 agreements. We have our Article 6 quality score, which I'll talk some more about in a bit, and we are also tracking Article 6 prices. Carbon projects, We have over 20,000 carbon projects in our platform from the different registries with granular information on all of them, eligibilities, CPP, CORSIA for compliance schemes. And we have our project ratings, which is what I will be focusing on in this first session. We have rated over 4,000 projects right now. Up to date. So we do have a very high project coverage and view of the quality in the market. Those ratings are a result of in-depth evaluation of individual projects against rules of the specific project types, and we compare also at a regional and local level. And our assessments are holistic, as I will show in a bit, and this information can also be found for nature-based, CORSIA-specific, or engineered CDRs. Now, into topic. Integrity is a complex issue, and reputational risks come from many different areas. Therefore, it's important to take a holistic view when assessing integrity and carbon risk. Emissions impacts may be overestimated. Risks don't only account in carbon. It's not only the quantification. There are many other important aspects, such as co-benefits, the legal aspects, how you work with the communities. So it's challenging to compare, and that's the task we've been decided to take on. So in our carbon project integrity, we look at 6 criteria, including the project's emissions impact. In that, we look at additionality, quantification, and permanence, and the project's integrity, in which we look at the co-benefits, the legal and ethical, and the delivery risks of the project. We have, from those, many sub-indicators to assess that. And this framework is also, we've come up with this framework based on the CCPs as well, so it's CCP aligned. Just a bit, I know you know, but just to come back to this, so additionality, how we see it, determine whether the carbon credits played a crucial role in financing the project, the mitigation activity going ahead. Quantification refers to how accurately and consistently with projects similar in that project type, in that region, were measured. Permanence is the likelihood of those emissions reductions or removal to be later reversed due to different natural risk or human risk such as project management, for example. In co-benefits, we consider all the environmental and social impacts, the externalities, positive externalities that a project can have in helping develop the human lives in those, and that also that it aligns with ethical standards. And that's in legal and ethical. Then we looked at who's developing, what's their legal background, how are they working with the communities, what's their approach, if they have sharing benefits and so on. And the delivery risk, the final one, only apply to ex ante. This means pre-issuance projects, like projects that haven't been developed yet. And what we see there is what is the risk of those emissions reductions that are being, for example, agreed on an offtake deal to not be delivered in the future. This one is particularly relevant for engineered CDR projects, which have different technology conditions that need to be met and advanced. So for each of these, it will be evaluated in a number of ways, including geospatial tools that we use that help evaluate the project's baseline, the deforestation rate, the carbon stock changes, and the biodiversity potential that a project can have. We do in-depth due diligence reports, and yeah, we have extensive benchmarking, as I was saying. It depends on the project type, the region that we're looking at, which are all very important to assess those risks. You can see a risk just from a global perspective. You always need to go into the local conditions. We are here to talk about Article 6. And Article 6 carries some additional risks on top of the ones that we have already seen for projects. It doesn't mean that you shouldn't be looking at the important, like all the risks that developing a project and that a carbon credit can carry, but you also need to look at other important quality aspects that brings Article 6. And that's why we have designed our Article 6 integrity framework, in which we look first at a country level. There is the risk of overselling that I know all of you are aware and thinking about with a lot of detail to actually come out with your Article 6 strategies. What are you willing to correspondingly adjust or not? And that carries at the end a reputational risk for the country, a reputational risk at the end for the buyers as well. So we're looking at the first aspect is the country's NDC ambition and delivery so far. And how we're doing this is first we look at the NDC has established measurable targets to meet in their NDC. Are these divided between conditional and unconditional, which would mean that you're considering what is the finance required to meet that part of the NDC, and that ideally Article 6 could be used for that. We looked at the target ambition. I will go in a minute to explain more how we do this, and we look into how's the country committed so far to meeting their NDC. We also look at the country level at the revocation risk with our Article 6 readiness assessment and some other operating environment risk metrics. And finally, at the project level, we have our Article 6 project score, which is based on the letter of authorization received by that project. So far, we have the Article 6 country score for about 70 countries, and we have the Article 6 project scores for all the projects that we have mapped and that we have found to have an available letter of authorization that we can assess. So here to explain a bit more on how we measure an NDC ambition and delivery. NDC ambition, so what you're seeing here is first the net zero blended budget. The net zero budget is established by mixing together one, a least cost projection developed by the Network of Greening Finance Network and GFS. And we included into that the University of, I always forget the name of the university, I'm sorry. Where do I have this? Yes, the University of Grass methodology on fair share. And we blended those two. So our projection for what should be an 1.5 or a Paris Agreement broad target aligned NDC projection for each country is already including fair share considerations. So for a developing country that still has pressing developing issues, we will consider that into adding some more emissions on what you could have. So if the dotted lines, what you would see in this example, is The lower one would be a cost-effective line. So it would say that, yeah, you had it around 5, less than 5 year by year. And then the upper one is a complete fair share line. So what we're using is a blended of those two. And then we project the NDC aligned pathway for each country depending on the short-term targets that you have set and the long-term targets as well. In this country, as you can see, it has a very ambitious NDC. So that will be scored a 5. So you could see they would be overachieving from that budget that they would have in our blended budget. And then, lastly, to look at the commitment to meet the target, we project what are the emissions, future emissions, on a track record if they continued with what they have been doing so far. And for that, we're using different IAM models and also data from the IFM, Carbon Market Watch, and our Scope 1 emissions country data. And what we do is we are cutting right now at 2024 and saying, okay, how does that align so far with what our projection of what you would be emitting based on your NDC? In this case as well, this example country is very much aligned with what they have been committed to do, so they get a 5. This is our NDC ambition and delivery. I wanted to share this with this much detail because I would be happy to hear your thoughts and talk some more about this after. On the country revocation risk, so what we want to look, just to finalize on NDC ambition, what we want to say here and to look is a correspondingly adjusted credit from a country that is ambitious and committed to meeting their NDC is a higher quality. And I want to give a clear also signal here. It doesn't mean that what we're thinking or what we're saying is you have to meet your whole target to then correspondingly adjust for it to be considered high quality. No, you have to be in line with what you have projected to do, and you have to be considering things fully for when you're giving corresponding adjustments for it to be high integrity. And then we look at the country's revocation risk, and it's on that, we take 2 aspects. The Article 6 readiness. We've been talking a lot about Article 6 readiness in this past days. And our take on readiness is, 1, we look at the market activity from countries so far. So have you signed Article 6.2 agreements, issued LOAs, approved CDM projects to transition to PACAM? And that gives a sense of how active you are so far in the market. What's the country's Article 6 infrastructure, regulatory-wise, and also in terms of technology and registries? Are they being considered under development? Are they finalized already? And is the country, if they should, comply with already Article 6 reporting requirements? And I know Perumal was just talking about this. Reporting requirements will only be needed once the first transfer occurs, and that's how we're assessing it. However, I do, from the private sector, think it gives a good signal if you are already putting your reports in organizing things, showing in the initial report what you've been approving if you're already giving LOAs, even though if the first transfer hasn't yet happened. And in the operating environment, we're looking at indicators usually used in the financial sector on the country's institutions, economic factors, and political stability. There is the project revocation risk. So that's what we see on NDC ambition, so the risk of overselling, reputational risk, and then there is, at the country level, a risk of a revocation of a given corresponding adjustment. But there is also that risk that could be assessed at the project level, and that's by looking at the letters of authorization. And we have two key aspects that we're looking there. Is one, the transparency in the LOA, and this means, is it publicly available? If we see that a project has been approved, is it reported in the UNFCCC webpage? So we are considering if you are already putting reporting obligations to the project developers and those, it's not required, but it is a good way to get the information that then you will need to report. On the LOA comprehensiveness, we look if it does already meet, and I know many of those will need to be updated, if it does meet the mandatory requirements agreed last year, and the revocation conditions set in the LOA. This also includes the first transfer definition. And on this, I want to take a pause and say I will be talking more later about the potential demand that Article 6 can unlock, and it can be big if the right conditions are in place. But in the short term, one of the imminent demands is CORSIA. And on the first transfer, Parimal touched on this point already. When you're defining the first transfer, if the first transfer is defined as the cancellation, there is a big problem and for it to be CORSIA. And basically, I don't see how practically it could be CORSIA eligible if the cancellation is defined as the first transfer, even if it's authorized for CORSIA use. So just wanted to give that message so you have it in mind when you are considering who are you authorizing for, what's the demand that you want to unlock with those credits that you're willing, with those ITMOs that you're willing to sell abroad. And lastly, we're looking if the LOA includes benefit sharing details. I know that these are many times not included in the LOA, but either privately agreed or included in your regulations or in the Article 6 framework or procedure. But we do see on this, where we're looking at the LOA, if there's a clear benefit sharing established, it gives clear signals to the market. And we do see better as if the benefit sharing includes also a broader spectrum of who you could share benefits. It is including you, the government, it is including in some way the community, but it is also setting clear rules for the private sector that everyone can meet. And yeah, just so that was our framework, and here just a bit of what we're seeing right now. And it's, I want to give a good, we're seeing that the market is improving its integrity. There are many initiatives going on. Crediting programs are improving the approach, the Paris Agreement crediting mechanism. Also, the private registries have been updating their methodologies, their requirements. Many times, well, now actually also they're looking to if they should align with PACAM, and some are already ongoing consultations on that. There are international integrity frameworks in place, CORSIA, the ICVCM, the European Commission with CDR, and that are getting market traction and that are improving quality of projects, especially the ones that we will see in the future, and I'll share a bit more on this. And then we have also private sector innovative solutions. We have insurances, which have a big role to play, will play a big role for CORSIA, but also on the delivery risk, they can play a big role in that. And ratings providers such as us, who are, what we're trying to do is to bring clarity to the market and to bring visibility on what a good project should look like and how any buyer, investor, or anyone or a developer can, in an easy way, say, is this high quality or not? So buyers are increasingly seeking high integrity. Here we're showing the retirements, annual credit retirement based on a rating, and as you can see, between 2022, from 2022 to the first semester, first half of this year, the retirements of high integrity credit doubled. This is A and above. And the retirement of low, what you could consider low integrity credits, those rated B or below, reduced from 56% in the same time period to 35%. So buyers are looking for higher integrity. When we look at the pipeline projects, these are projects that are not yet registered, but that are coming to the market soon. We have rated many of the pipeline projects as well. You can see that the blue, which is the higher ratings, increases substantially between existing registered projects, which are older in general, that to the pipeline ones, which are new supply continues to increase its integrity. And we're also seeing a price integrity premium widening. This is our average price index for the different project types. The green line is showing those with the higher ratings. Red line, those with lower ratings. As you can see, especially in 2025, that difference has continued to widen. So we're also now seeing that the quality is reflecting in prices, which aligns to the buyers already considering quality and having visibility of what is quality. This varies by project type. This is just a general average. And just to close, as I was saying, we're seeing also new risk dimensions in the market. On Article 6, as I explained, here are our average scores. As you can see, most projects with LOA are scoring well. Most NDCs are scoring well of what we have assessed so far. But this will become increasingly important as the supply of Article 6.2 credits and in the future, PACAM credits starts to increase. Thank you.
Thank you, Anna. Sorry. Oh, thank you. Thank you for providing this overview, and I think there's a lot that we can then latch on also in terms of the questions that we'll have, but I'm sure on pricing, I've had a few discussions with quite a few participants who will definitely pick this up. But for now, before I come back to my neighborhood and talk about what Irena is doing, especially linked to the innovation parts, may I request Olufonso to please expand a bit more on the AfDB's initiative on risk mitigation.
Thank you. Good afternoon, everyone. I think this is getting very interesting. We started this conversation about 2 days ago, and we've been building on some of the ideas around the room. First, let me really thank the conversation that we had just before coffee break, because you did set the scene for some of the ideas we need to talk about. Now, and given that this conversation is around unlocking, and every time you hear that word, unlock, then it means that some things may not happen naturally. They may need deliberate effort for certain answers or results to be achieved. And one of the key aspects is the question or the conversation around risk. But I want us to set the scene and perhaps just travel back to history, because history matters, especially in the African context when it comes to carbon market. I was very interested in the result of the CDM era. So in the first commitment period of the Kyoto Protocol between 2008 and 2012, there were a total of 1,650 projects within that portfolio, and with a total value of about $220 billion. What was interesting was there were only just 33 projects from Africa. only 33 projects out of over 1,600 projects, just represent barely 2%. And that's the first point, because you ask yourself why. Despite the enormous natural resource, the opportunity for mitigation in Africa, how was it that we couldn't, take the advantage of the Kyoto era? And when we then see a lot of the conversations that are happening today, we're beginning to see that shift, that we cannot afford to repeat the mistakes, we need to do things differently. And if it's the capacity that's needed, or if it's the financing, we need to be able to unpack why is it that a continent with enormous opportunity could not benefit or could not participate in a global mechanism of that nature. Now, you come back to the experience so far in the voluntary carbon market. And for some of you, you may probably know this. 70% of the total credit from the sub-Saharan Africa in the voluntary carbon market came from just between 2000, in the last 5 years, came from only 5 countries. So 5 countries responsible for 70% of credit from sub-Saharan Africa. And then when you match that with the reality of the fact that as we speak today, the country is just currently supplying no more than 2% of its annual potential. And we keep asking ourselves, because if these numbers are showing us that the opportunity is huge, and this is a global market, and we're beginning to see the value in being part of it, the question is why it is not happening. Now, the answer to that question is not just one thing. It's a complexity of many factors. But one of them is largely, and based on our own experience, is largely due to lack of available capital to be able to drive both the policy framework needed, but also the project development on the ground. And that amongst many other things. Now, if you find yourself in another room, you're going to hear that the reason was lack of capacity. And if you find yourself in another room, you're going to hear things about the weakness of the market. So depending on who you're talking to, but let's agree in this room that we want to look at finance as a critical element of making that opportunity or taking advantage of that opportunity. And I'm beginning to, and the gentleman from AETA presented the transactions that are now going on within Article 6.2. You saw that matrix. And it was important to say that out of the 70 agreements that are currently signed with 28 supplier countries, 9 of them are in Africa. And that is, when you compare that percentage and the prospect ahead, we're beginning to see a shift that something is happening on the continent, and it needs to be scaled up. So this is where the African Development Bank begins to pick interest. So over the last 10 years, we've been undertaking a program, a very internal program called Africa Carbon Support Program, where we're just monitoring and looking at a number of analyses, only for internal use. One on carbon pricing mechanisms, but the other on the type of transactions that many Africans were getting in. But now we're beginning to see the need for, as NDC implementation is a critical element for us, we're beginning to appreciate the value of the role that carbon finance plays in that. In fact, I want to encourage you, if you take a look at all the NDCs submitted by all African countries, do a simple exercise, Control F, put carbon market, you're going to see carbon market in all of them, including countries that don't necessarily have the capacity to be able to deliver, because they see that value, they see that opportunity in being able to finance the NDC. So that's the entry point for us. NDC implementation is very fundamental for the bank, and so we're using our traditional resources, but also leveraging on our convening power and our strategic partnership to be able to drive countries' attention to developing a very good implementable NDC. And I think the key word for us is the implementability. Not just something that you are overly ambitious about, but something that is built on your national context, but things that are also built on your institutional capabilities. And we've been providing that support through our Africa NDC Hub to countries to either do some additional layer of analysis that will feed into the NDC, or basically do some deeper level of engagement in terms of what Article 6 implementation will look like. The second layer is we're also beginning to integrate elements of carbon finance in our own traditional operations. So we have this facility called the Sustainable Energy Fund for Africa, SEFA, which is doing a lot of work in renewable energy, particularly in the private sector. And we decided, our leadership decided about 3 years ago to create a window within SEFA on carbon finance. And we started, and I'm happy that a few months ago, we actually approved, and the board of the bank approved this first carbon project in clay cooking, which is a window within SEFA. But it's just one project. And obviously, clean cooking with enormous development outcomes. But when you think about the opportunities out there on the continent, you can't just have a sub-window within an existing facility. And that brings us to the third point. And the third point was, over a year ago, we started working on a dedicated, standalone, demand-driven facility that is targeted at supporting carbon market, carbon investment in Africa. And something built around a substantial amount of money, hopefully. But what is important is to recognize that having taken a quick landscape of all of the engagement we're seeing on the continent, a lot of the countries right now that are receiving support around policy framework at the very upstream level. If it's not capacity building, it's TA to the DNA to support the engagement around mobilizing support, countrywide support. But it shouldn't be there. So the facility we're creating has got two engagement windows. One of them, the first, is an upstream engagement window that is looking at, first and foremost, we strongly believe, and we're talking to a number of partners here, that it would be useful to have something like a readiness index or a readiness matrix for African countries that helps us to be able to know where a country is at every stage. If it is going to take level 10 to get to readiness, what we all agree to be readiness, what does a country need to do to move from level 1 to level 3? What does the country need to do to move? Because what that happens is development partners can then provide targeted support. So within our upstream window, we want to invest with, well, for those of you who might be interested in that, work with some of our partners, develop a quick readiness index that helps, or a matrix, that helps us to know what kind of targeted support can we provide to countries. It's so unfortunate that today some countries are heavily supported by almost the same donors, and some countries are completely ignored. And it's important to be able to bring that equity into space, but we need to be able to know what kind of support country needs. And that support is not just the policy makers, or even the regulators. It's also to be able to create what I call a market-creating policy system in a country, to the point that the private sector is actively engaged in that. The second window in the facility is a downstream window, and it's basically looking into, first and foremost, for some of you who may know this already, out of the 65% of the credit from Africa that went into the VCM, because we've got a lot to learn from VCM, are actually supplied by 19 companies, 19 project developers on the continent. Only 19 project developers are responsible for 65% of the VCM credit on the continent. And you can't build diversity and equity across board if you're just going to be limited with just few developers. And some of these developers, I mean, for most of them, they are not necessarily African developers. So what will it take to be able to provide the level of support, capital that's needed for a lot of African-based and African-structured and African-owned project developers to get into this space as well? And that is what the downstream window will be doing. We want to provide, and using a range of instruments, from guarantees to equity, to concessional loan, even to reimbursable grant, to private capital. And the way we are structuring the fund, because the window, the downstream window, there will be repayment. You know, it's not free money. So the fund, we expect it to continue to grow as we mobilize resources there. So that is the African Carbon Support Facility. It's a journey. We haven't done call for proposal, but what we're doing at the moment, as we are, elevating the partnership that we need to be able to capitalize, But we're also doing another thing in parallel. We're talking to project developers who may become some of our candidate projects to be able to understand the structure of their project. So from an e-mobility project in Ghana that already has an offtake agreement with Clink Foundation on behalf of the Swiss government, to a South African wildlife rangeland management project that is part of the national compliance mechanism, to even voluntary carbon market in Nigeria and in Cameroon and in Kenya. There's an opportunity to diversify the portfolio, but also there's an opportunity to understand the unique approaches in all of these projects and to also help us to deepen our knowledge on integrity. And I really like the point that you make. The last point is we see this facility as an incentive, as a tool for achieving integrity in terms of our selection process, in terms of the kind of projects that we will accept. It's very important, and that's why this conversation is very important for us, because if you also build integrity within a facility, then it can also help you achieve in your selection process. I'll keep it there for now. Hopefully we can get the chance to reflect more. Thank you.
Thank you, Fonsu. Insightful as always, but I think we'll get into some more discussion on that. But while we're talking of facilities, that kind of brings us back to Ahmed, where you'd shared some of the facilities that IRENA, I'll give this one to you, okay, however you prefer. You'd shared some of the facilities that IRENA has put in place, largely on, could you just walk us through how is this, like what kind of project facilitation is being done under, say, TCAF or the other one that you were talking about yesterday? Yeah. Now it's on.
Okay. Well, thank you very much, Zubair, for the question. Thank you. So the project facilitation that IRENA is doing, actually, along the fact that IRENA is not a bank, IRENA actually is acting like a fund manager. But fiduciary responsibility for sure is not on the IRENA side, but on our partners. The facility we have until now, we mobilized about almost $5 billion. And among our partners, World Bank and EBRD from London, as well as OPIC Fund, and most of the global de-risking guarantees. And the facilitation here is to make the project, or means that the project has to be, well, I hear the Alfonso when you're talking about implementable project, which basically meaning bankable project, in a sense that at the end of the day, the investors and the financier, like African Development Bank and our partners, are really making sure that they will get back their lending capital plus a reasonable economic and financial return, or what we call it in banking language, internal and financial rate of return. Actually, one of the very important facts we have to say here that when you look at any project, when it's starting from concept until reaching and signing the term sheet to reach financial closure, we will know and I'm sure that we will realize that the least continent that receives such kind of capital is Africa. And the fastest is for sure Asia, and in between Europe and Americas and Latin America. So facilitation here means in a very simple way is that how can we make the project really speed it up to finalize all related standalone or project specific project to come up all its barriers and to help the countries who are member of IRENA to reach financial closure so that benefit from the project, whether on the side of energy transition, this is a start, but also now including the carbon credit financing. Just to be very clear on this part, one of our important partners is Swiss Re, and Swiss Re, for those who are from development banks, are really to guarantee banks. They are not to guarantee project. They do that, but more importantly for Swiss Re are the global financial institution for de-risking projects is to guarantee the payback for any kind of loss for the banks, development banks themselves. So they are since the beginning engaged with us, so we wanted to make sure that even the financier like African Development Bank, they are also having some space for when they provide funding with a risk capital, they can also support it by Swiss Re. The important issue is that specifically for Africa, since we are talking about this, until now, Africa is not reaching this kind of confidence for Swiss Re to be in. Yet, some countries, as mentioned by Alfonso and earlier by my colleague Vermal, that only about 5 countries who are leading most of the climate finance transaction for the time being. These are the only 5 countries responsible for more than 75%. But what we are trying to do now along carbon finance and facilitating this is actually, there are 3 important examples. Let me start with the first one, capitalizing on the earlier discussion from Ayita about Corsia. I'm happy to say that we are partnering with the ICAO, who are responsible for implementing Corsia, which will become now optional until end of 2026. Starting 2027, the Corsia will become mandatory to all members of ICAO. And these are mostly the more than 99% of the whole world. So we are partnering with them, and we are creating a specific investment window among World Bank and EBRD and IRENA. So any project coming under Corsia will become for our bankability and validation before it goes to ICAO, as well as the third partner with us is IATA, which is the government institution responsible for civil aviation. And the good news that we just got it yesterday, that now the most giant player for civil aviation is joining us, which is Boeing. Boeing is going to join and sign with us coming January to be part of this global initiative. It's something very new. We are in internal discussion now with Airbus to join as well. And for the time being, there are 2 important things I have to say, and I'm very proud to say that this is the first time to announce this because we are still in the middle of discussion, that the opportunity or the potential for Africa is very important along providing what we call it SAF specifically, or the feedstock for sustainable aviation fuel. So, and there is 2 potential countries to provide SAF feedstock that we are looking for. How can we finance this refueling station? Would be in Africa. There was some kind of competition between Asia and Africa, but actually the feedstock and the recycled cooking oil, which is another big source for SAF, will be coming from Africa, and these 2 countries are Kenya and Cote d'Ivoire. This is what we can announce for the time being, and I would like to give the credit to the Africa Climate Week. This is one of the very important issues we'd like to highlight. But the other important issue is that we are also partnering with World Bank for validating at global mandate level for any kind of authorization letter. The World Bank, and specifically MIGA, they are the biggest financial institution globally to provide authorization guarantees or guarantees for authorization letters. And they already in partnering with us to provide such a kind of specific guarantee, because I believe that all my colleagues from either from Morgan Stanley here, Joanna, or from African Development Bank, those banks or those players, they never cover what we call it geopolitical or war risk. MIGA do. And the first country we are doing that for such a kind of project is Ukraine, because we're also supporting Ukraine. Why I'm referring to Ukraine here, because despite of what's happening in Ukraine, it's a good example to share with our African families. I'm African by definition, I'm Egyptian. I can say that basically it's very important to highlight such a kind of climate finance is also working and looking for how for countries like Ukraine to benefit out of this. To the sense that President Volodymyr Zelensky have promoted the Deputy Minister of Environment to become Minister of Energy, mainly for carbon finance, and how can they do that? That's really a very good support to European partners with us, specifically France and Germany, who are supporting that with us. And I myself am dealing with this from our office in Germany. And the third and final good example that I would like to refer to, that what we are partnering with World Bank, as a good example, I think we need to rely on our partnership with UNEP specifically, that the most advancing region in the whole world for monetizing carbon credit financing is actually Europe and Central Asia. And we have good examples that we started there with World Bank to advance about $150 million. One third of it already given to Uzbekistan to start a project on how can we make the energy efficiency and renewable energy provide financing as an advance of or operationalizing Article 6.2. And we are doing that now. And my final point actually that I would like to highlight also is that you have seen today in the morning session that Aita was referring to the data using artificial intelligence as through blockchain for carbon credit big data analytics. So enhance the transparency and the market integrity. I liked very much what mentioned by Bermel about this yesterday and today. And that's why Singapore is leading this. Why is that? For a simple reason. Because Singapore have what we call it ACX, or the Verist Global Blockchain carbon credit to enhance and to operationalize carbon market, which providing a very good carbon integrity there. That was done about 5 years ago with a leading conglomerate from Emirates. It's called IHC as a private sector to provide such kind of technology. In partnership with IRENA, I was part of this team at that time when I joined IRENA. Now we wanted to replicate that in Africa. And again, we're looking for basically UNFCCC. I think in my coming visit to my office in Germany, within IRENA, I need to discuss that with Bermel and the team. How can we make this work? Because working now with Egypt and also to see how can we create such kind of carbon market integrity or blockchain carbon exchange, what we call it EGCX. But the issue here is that to be realistic and to be down to earth, the 100% blockchain is not going to work in Africa, like what is the case in Asia. Because of a lot of what we call it AI parameter and index. Parameters and index meaning that to what extent blockchain is going to work in the AI matrix and index in Africa. Here is the issue that what we call it econometrics is not going to work. So the best way to do is that we already helped Egypt to partner with NASDAQ of United States, who have a very good system, what we call it systematic INET, in order to work on blockchain, plus the credit rating of NASDAQ for carbon trading is very high. By that, we creating such a kind of what we call it semi-blockchain partnership between Egypt Exchange and NASDAQ, and ARENA will become the validation and the robustness of the system. And to operate this, we hope within the coming 2 to 3 years. Again, we are looking for a partnership. We need to discuss internally first with UNFCCC, because our role is facilitation. This is again within the answer, the questions that mentioned by Zubair. The idea here is that we wanted to operationalize what we call it market integrity and to create a market or level playing field for supply and demand. And this is basically what we can do here because we need to put a signal of confidence for private sector investors and financier, like African Development Bank, like Morgan Stanley, like EBRD, like GCF, like World Bank, versus the demand side. So we need to mobilize the market on the both sides. So market integrity through this carbon exchange, or what's called EGCX, I think will be very important specific, and I will stop here that the most conglomerate player who's coming to support this one will be government of China, because the idea here that China is putting a lot of investment for renewable energy in Africa, starting with big investment and the industrial zone in Suez Canal. I will stop here. Over to you, Zubair. Thank you very much. Ready for the question. Thank you.
Thank you. Any questions from the floor for any of the panelists? Yes, please. Sir, you just have to walk up to the mic closest to you.
Do this one work? Okay. Well, thank you so much for the 3 presentations. Yani, it was very good. Yani, I just wanted to ask yani, 2 questions for the reputable lady from CSI. Please, yani, do you have any, yani, first of all, yani, I've seen your website, all of those are projects. Do you have a whole country as a participant to your website or not? This is a question. The other one, since the reputable colleague from Arena, he said about reputables and things like that, do you monitor or do you have a scope to monitoring the common issues within the IRX with its scope benefits, and especially in the voluntary markets or not? We are still talking about carbon credits and carbon marketing. For this, thank you. Those are 2.
Is his own. Sorry, you repeat the first question. I didn't get it. I'm so sorry.
The first question I'm talking about, yani, when I've searched your website, it's only projects. We are not talking about countries. It is mentioned that 88 countries, but are we taking the whole of the NDCs, the whole of the carbon planned, let's say, any issues within a country as a whole, or we are talking about projects per project by project, that what is my, let's say, share of the countries NDCs, am I doing my compliance or what, and monitoring that. Thank you.
Thank you for that question. Yes, so in our platform we do have information at the project level, as you're saying, but we also have country level. We have country level on our country profiles. From a policy perspective, we analyze qualitatively. You're at the NDC targets, what are you setting? What it's the compliance schemes is in place? Does it have an ETS? Does it have a carbon tax? How are you using credits, or how can credits be used to meet that? It also includes more information on land tenure regulations, community engagement, and if it's for renewable energy, we have a deep dive on renewable energy on the profiles at the country level. We're also for NDC ambition metric, which we're including in our Article 6 integrity assessment. This is all done at the country level based on the country's NDC short-term targets and their long-term strategies. So country level, it doesn't reflect in any way the existing projects of that country.
For the second question, if I got it correctly, that for monitoring the compliance, I have to say that since IRENA doesn't have fiduciary responsibility, it's up to banks. We always do what's more important, because banks or the financier, when they come to validate or basically to provide their funding, they have to count on what we call it the system that works and the robustness of the system, or what we call it the system integrity. And for this one, basically we provide, upon demand of the countries, the all needed help to make the system really very transparent and robust. And we do that for the countries, not on the side of the financier. So when we do that, then banks, and most of the time banks, they come to us to say, please give us help with these countries to comply with us. And even after the transaction happened, the monitoring we do that ourselves to help our countries to come with very robust and transparent process. And we always do that for free as part of, like in UN. And that's exactly what makes the system really works for us. But doing the monitoring ourselves, no, we can't. But we do the validation. Validation here meaning that there must be specific, up to the UN system, validating organizations or consulting firm that every year to become from UNFCCC Secretariat. And basically, after that, when the countries come and ask us to validate that, or the financier, we can do that for them. But, and again, up to the approval and the request of the country that hosts the project.
At the end of the day, we have, as by our constituency, we support our countries upon their demand. We cannot do that by ourselves. Thank you very much.
Thanks very much. My name is Jamie Furness, and I work as kind of a legal and regulatory consultant with the project developer. I have a question that's prompted mainly by your presentation, Juana, but it probably could have been asked at any other point during these 2 days, and it's about the format of authorization letters. It's something we've been struggling with concretely. What should the wording of these letters consist of in an ideal world, and also what can practically be obtained from the relevant ministries in the countries where we operate? The UNFCCC has a template since I think about March. And perhaps I could ask some of the UNFCCC people present whether that template was conceived of as a way of sort of capturing information at the time the corresponding adjustment is made, or whether it was an ex ante authorization. Because when we look at Vera, or ICAO or other organizations like MIGA, they've all come out with their own templates which typically contain some additional clauses that go beyond what's in the UNFCCC template, and in particular the arbitration clause, which we've discovered is a sine qua non for the majority of the insurance companies. But is not contained in the UNFCCC. And there's some wording in there, for instance, with the vintages. It says years during which mitigation occurred as covered by the authorization. So like that use of the past tense suggests to me that this form would be filled out kind of at the end of the period, whereas as project developers, we're trying to get a forward-looking commitment, say, over the next 5 years, saying that corresponding adjustments will be issued as our credits are issued. Would anyone be willing to speak to that? I'd be very grateful.
UNFCCC? From our side, just to say, what we're looking at is the content in terms, not that much the wording of it, if it was in past tense established, which would mean that is after. We do understand as the LOA as the first step, in which they authorize the future application of a corresponding adjustment, and how we are comparing that is to the mandatory content that was defined in the guidelines last year, and then on the specific content on does it have or not revocation conditions already established, what is the first transfer, so more of what data can we get from there, and how can we analyze it in a, not such a qualitative way.
No, yes, I have a lot of questions. Yeah. No, I think like in terms of like whether or not you have to use what template, I was not sure when I said in the morning. From a 6.2 perspective, like from an intergovernmental process, what has been agreed upon is what are the minimum contents that is required within the authorization statement, right? Like whether if MIGA or somebody else wanted to translate this into an insurance a bankable product, then that's a complete different thing, right? Like because we don't look at arbitration. That's not part of our thing. Like what a bilateral cooperation between I've seen Daniel. So a bilateral cooperation between Ghana and Swiss. Like I remember talking to Daniel 3 years ago with Singaporeans during the SB sessions on how arbitration works, what kind of role that the UN has, etc. Right? So we don't have any role on the arbitration. It's purely a market dynamics, and that's a bilateral decision between them. They have their own contracts to work with. So from an authorization, what provides a letter of authorization is an assurance that the country is taking a commitment to transfer this much amount of units to be used for what purposes, whatever they authorize for. This is not an assurance for corresponding adjustments. I've been repeatedly saying, like the corresponding adjustments is not even reflective in the annual information, which is the annual report, which you will submit on every 15th of April for the previous year transaction, is still not a corresponding adjustments. The corresponding adjustments is only been visible in the structured summary table in the BTR, right? So authorization statement is nothing which gives an assurance that this is a commitment, right? Like, so if I am a country, I'm saying that this is what I'm authorizing for, and the vintage is being asked, the reason being that like there is a condition of banking and carryover, right? So, which I haven't said, this is my regular, one of my favorite topics in terms of banking and carryover, right? So today for other international mitigation purposes, you don't have a banking and carryover rules, but you have a shelf lifetime of your units based on vintages for its use under NDC, right? This is paragraph 16 of the decision, which says that you shall ensure that the corporation shall not increase between and in and between the two NDC periods. So that's the safeguard that has been introduced by parties for the banking and carryover, for people not to speculate in the market. So what they have done was currently for OIMP, you can have any vintage being used for any purposes, right? For NDC purposes, for a 2030 NDC commitment, you cannot use the vintage of achieved outcomes beyond 2030 for pre-2030 period, and it cannot be carried over for 2031 period. That's where parties have added in the authorization minimum requirements for authorization on that vintage, and that's why it is in past tense, because we need to have correct numbers. And then in accordance, for the purposes of WIMP, so this came from Glasgow for NDC, and then for WIMP purposes, we have a decision in Baku, which again says that 1 year before, like you have to basically book your accounts a year earlier in order to be used for WIMPs, because for the WIMP purpose, as I said, there is no, like unless Corsia says that I wanted all airlines to use only from 2027 vintage for 2027 to 2035, they don't have that restriction, right? So today, as much as that I understand that Corsia doesn't have that limitation. They said it has to be units that are generated after 2021, but do not necessarily the exact vintage to vintage. So for that purposes, in order for that to be reported to us as WIMP, even if you are using it for Corsia, the countries has an obligation to submit, like today Zimbabwe has submitted an initial report. We know that that authorization is for Corsia applications. Quite a number of other countries have also done, like Cambodia has done. So we have received the authorization, letter of authorization, the annual information on their authorized ITMOS information, but yet we have not have their regular information to do that BTR assessment, which will only happen in 2026. And even for WIMPs, if you have to book your WIMP for 2030 accounting under the UNFCCC to ensure that it has to be booked by 31st of December that year, even though there is no limitations on vintage. So that is the reason why. And then we also talked about a concept of AMOS in the morning, right? So one of the countries, what it wanted to say is that these airlines from these programs can be able to purchase units, and those programs are from those countries. Like, let me take it more simpler, that it's an ACR or a car, right? Two standards. One country wanted to do that by saying that units coming from this standard used by United Airlines or airlines that are legally registered under the US, they have a pre-authorization that has been given that you can go up to 100,000 or 150,000, whatever is the demand. I'm putting an arbitrary number. So they give an early authorization, but does not yet invoke them to do an corresponding adjustments because they are not yet first transferred. So that's the rule it says. So you cannot see in abstract. So you have to differentiate between for what purposes it is being used, whether it is just an authorized mitigation outcome without first transfers. So if somebody, like I know that we are also talking to many colleagues, like including Miga, who are talking to us in terms of saying that we are doing this, is it right? Like all what we tell them is that what I can tell them is that what my parties have told me to do as a minimum requirement. If in order to make it commercially viable or commercially more lucrative by adding additional elements to the authorization template, that is out of their own will, that we will not be looking at it, because what we do is that when our reviewers look at the submission of the authorization, they see whether the required information that is required as a shall requirement that is included in our decisions, whether they have been captured in the authorization statement. And then once the country has said that, okay, I have authorized this much amount as a first transfer, they would have reported that in the subsequent year in the annual information. Then the year after, I would see in the regular information, which has both qualitative and quantitative information, and the BTR, I will compare the consistency across the numbers, and then I will identify an inconsistency if the numbers are different. And the only place where it is even not stopping the trading, but it says that you will not be able to account for your NDCs if there is an inconsistency identified in the quantitative numbers. So that's the only checkpoint that where you can say that, yeah, this country, what it has done is not correct because there is an inconsistency identified. And for us to close the books, it says that go back to the party and ask them to amend the incorrect numbers, and you make any number of efforts to make sure that they address those concerns, right? So when you are looking at it, you just look at whether whoever is preparing those templates, I would invite you to see that whether the shall requirements that is published as a template from UNFCCC on 6.2 is there or not in that. So that captures what is required under the UNFCCC. Then for the commercialization, there are many other things, like if you are engaging in removal types of activities where you wanted permanence risk to be covered, so they wanted much more things. If you have a political instability in a country, or if you think that suddenly somebody changes the authorization statement at some time and you wanted some insurance product to cover that, which is what happening in CORSIA context, right? Like people wanted to have that assurance. It's like the snowball effect of you wanted to leave the airline industries out of the risk. So you said programs, you deal with it. And program said, I wanted to be out of the risk. I put it to the project developer. In a very typical political way, I don't have many Indians. We say in the end, it's the common public, which is the stakeholders as us, who implement projects are the one who has to tackle all the liability going upwards. Thank you.
Just, I wanted to add one thing here, please. On the issue of arbitration, not single template for the authorization letter would come with a specific on this. This is a completely control between the country or the project developer and basically the financier. This has nothing to do at all with any of organization, at least for IRENA side, because we are handling that with World Bank. This part is always open. It's a template. It's not a standard in the box. It's up to the host country that will make the trading. And this going in compliance with what Bermal just mentioned. Just to make it very loud and clear. It's completely in the hand of the host country of the project. How do you authorize this? But there is not one cast in stone, a specific statement on this. Thank you.
I was going to change roles with Parimal and ask him a question. So if you are looking at the inconsistencies in the reporting, comparing all the reports, and you find that the numbers don't match, and you give it back to the country so they correct the inconsistencies, what happens if the country doesn't correct them? What can be triggered then?
Yeah, the countries...
And this goes to the conversation on risk, because it does, at the end, mean until what point does the revocation risk go to?
Yeah, no, I think like in terms of the revocation, like as you, I think, briefly indicated, as part of the authorization statement, one of the big outcomes from Baku was to make sure that like any conditions under which that you can make a revocation is made already upfront available, right? So that basically like captures in terms of the revocation, possibly like to me that's was supposed to be covering the revocation risk, because we started from the extreme spectrum of people asking full flexibility versus no revocation, and we found a middle ground in the negotiations to say that like, okay, as long as you upfront say that under what conditions you may revoke, you will have to elaborate that, and beyond that conditions you will not be able to revoke, right? And one thing that it needs to be also, the caveat behind that is that this is only for first transferred, right? Like what has already been transferred. right? So as long as that once it has moved from my account to another account, I will not be able to revoke. But for my future, it still doesn't provide you that full certainty. That's a possibility to revise that authorization statement, right? So the only cover that we have is what has already gone out of my account cannot be revoked back as long as that it is not part of that. So I don't think like in practical sense people are going to change that, but when it comes to the numbers, the two, of course we are not doing any sanction, like we don't have any power to sanction anybody or say that we will not engage with anymore with you in the markets. So their BTR will be incomplete. Like, so the country will not be able to claim itself that it has completed its BTR because the BTR review is subjected to the finalization of the Article 6 review in terms of numbers, right? So the AEF will also identify that there is an inconsistency, and I can only go back to the country and tell them n number of times that there is a mismatch. And what it will happen is that because so this is where like I may be quite provocative. That's where I'm not a big advocate of a unilateral cooperative approach, right? Because in an bilateral cooperative, by design, like I know that many people who are in this room are part of Paris negotiations and some are not part of Paris negotiations. And Paris is never designed as what we are seeing today as 6.2, if I have to be humbly, brutally honest, right? Because the original idea was, even the treaty language says it is cooperation amongst parties. That is Article 6.2. It's not a unilateral cooperative approach, be it. So under the unilateral cooperative approach is like, I see like in a bilateral cooperative approach, there will be a peer pressure because it will also affect the other country's BTR, right? So if I'm engaging in a cooperation between, Daniel ran away before I tell something, so it's a Ghana and Switzerland, and then I will not be also able to conclude the Swiss BTR because I would be telling them that like, because there is a number that is wrong, so I'm not sure which number is the right number in order for me to give that confirmation. And that peer pressure is there in a bilateral cooperation, which will not be there in a unilateral cooperation. I have to chase them by saying that, and that's where like as what you also said, I also have said, if people take authorization, it covers most of the risk. And I'm still fearing, and I'm like whether it be it Guyana, be it Suriname, everybody has taken authorization as the trigger. And we have also seen Zimbabwe, which is authorized. I haven't read all the initial reports, which came in a flurry in the last few weeks, including Rwanda, Cambodia, Mongolia, Thailand, under the JCM. But most of them have taken authorization as a trigger. But if somebody takes cancellation as a trigger, I will have a heavy risk in terms of telling these numbers, because unless that I get the number from a cancellation report, I cannot justify them. So that's the problem. But otherwise, in authorization, I don't care whether which airline is bought, which airline is cancelled. It doesn't matter, because I, as a host party, has already taken a responsibility at the authorization to adjust. And from a global accounting perspective on GHGs, all that I'm worried about. But yeah, cancellation will have more risk. And I'm sure that people will be moving some of the unilateral cooperative approaches, authorization for international mitigation purposes, will choose cancellation. And that's why we have a bit of a provision. That's what I said in Baku, which is about closing your accounts 1 year earlier in order to be used for the subsequent period. That's what we decided in Baku. I think, forgot the paragraph number. Yeah.
Here, because I like this discussion very much, like what Joanna mentioned. I think there is something very important. I've seen it in a couple of transactions, but not for carbon finance in general. There is always a general rule for, I'm sure my colleague who's a lawyer who understands this. Special condition basically supersedes general condition. On the same scale, any bilateral agreement can simply cancel any kind of multilateral cooperation. So deal between, for example, Switzerland and Ghana, for sure any special condition will come over any kind of bilateral agreement, and that's exactly the issue. And what I did see when in our discussion as Irina, when we have been provided a letter of authorization template from MEGA, we put a very special, clear paragraph in case of any specific issue about arbitration, for example, or others. Any bilateral arrangement should include it as special condition, which reveals and supersedes any kind of bilateral arrangement. I just wanted to add that just for this discussion, which I like very much, just to see, but which I fully agree with what you mentioned, Bernard, but I wanted to say that for transparency and robustness of discussion. Thank you.
Any other questions? No. Okay, yes.
Thank you very much for giving me the floor. I know I'm standing between lunch and here. My name is Edward. All right, that's good. My name is Edward Okoto Moya. I serve with the East African Development Bank, a bank that has supported the UNFCCC since 2013, based on the CDM. We have very good projects that are supported by GIZ from the region on green hydrogen and other related climate smart projects. However, when they come to the bank, we face a challenge, not from the ESG perspective. I am the environmental and social management specialist, but from the risk, as MSCI stated, my colleague from AfDB brought some aspects of blended financing and support for such projects. Now, how can the bank be supported so that the financial aspects, legal aspects, and regulatory from the national countries like Uganda, Kenya, Rwanda, and Tanzania be aligned? We are willing to support such projects because there is a huge potential. But why are we not supporting? Can the UNFCCC come on board and support EADB fully so that we can finance such projects which are really brought on board with support from GIZ? Thank you.
We'll see you later.
No, I thought it's more as a commentary. Like, I think we have been working, Sven has been quite regularly bothered by me, not. So also, like, we have our own regional collaboration center in Lomé, which works, which is part and parcel of the Eastern African Development Bank. In Uganda, okay, Kampala one, sorry. I often mix between the two. So I'm sure that, like, yeah, we are always happy for any action, climate action to happen, even independent of whether they are market ready or non-market approaches, right? Because we are here doing carbon markets, but we also have a broader mandate of supporting non-market based approaches. And if something can be done, happy to associate. I took it more like as a comment in terms of collaboration and how can we unlock. Very happy to continue the conversation. Okay, Alfonso, maybe like I missed the question probably.
No, well, he just wanted some comfort that you'll be available to provide some support, and I think that's fine. What I think is important is, from my part, is to just think through the structure of most development banks. You've got a group of guys who are credit risk analysts and officers, and they haven't reached a point where they see carbon as either an asset or a financial instrument. So for them, it's very difficult for you to come and say, I've got a beautiful project, it's nice, the development outcomes, emission reduction, I need funding for that against a future payment. So, and that is something that, well, banks are slowly changing, they're creating. So what most development banks are doing is, instead of doing that kind of transaction on their own balance sheet, they rather create a facility on the side, or a trust fund, that is able to undertake that kind of work. But maybe then this is another opportunity, since this is all part of the UNFCCC capacity building framework, to then begin to see how do we begin to appreciate, carbon credit, certified emission reduction, as both as an asset or a financial instrument. Thank you.
Yeah, and just to add there, to bring finance into the table, that's where de-risking takes a lot of, it's so important. So if there are facilities that can provide some type of guarantees, then there's another bigger financier that can then feel safer to come and step in. If the authorizations, if it's going to be Article 6, does reduce risks of revocation, then the private sector and the finance sector will be step closer to step in and see how they can see this as an investable asset.
No, thanks. I think we are also working with UNICTROL and other colleagues, including the World Bank. When I first day talked about one of the, the 4 integrities which we talk about, and very limited that we talk about is the market and the financial integrity, right? So we have been talking with, in terms of the legal nature of the credits and how they could be defined with multiple partners that we are working on. There's something which IASCO has put some paper for securities and bonds, the standard setting body came forward, and they said it's more an asset, and then some disputing within the banking sector itself, no, it's a financial instrument rather than call us an asset. And then UNICTROL as part of the UN entity, along with some of the UN agencies like UNEP, FI, even people from WTO is part of it. We are part of it, and there's quite a lot of private sector people, multilateral development banks are part of that conversation. And I'm hopefully that we will try to resolve that, because none of the markets, even under the KP, right, what was basically happening is more in terms of concessional loans is all what is happening against for that of the carbon market things. At least I know quite a number of friends who are part of me doing consultancy work. I only started doing this intergovernmental process from 2013, and my past life was 10 years as a very active carbon market participant in the KP1. Right, so in those times, we have got quite a number of concessional loans that quite a number of times from the banks, and that's what they did because it improved the profitability, or as kind of a catalytic basis for the financial decision making for the people who do your project risk assessment, to say that, okay, this has a possibility of carbon credits, so even if the PLF of the project activity goes below. I'm telling Ahmed, way back when we are still talking about a wind PLF of 19%, and now we have gone past 40% now. So during those times, that are some of the considerations I remember as a consultant having the conversation with the banks, and then what we could get is kind of concessional loans. But now when we look the carbon market for being scalable, transformative, and to align with the dreams of the countries of becoming completely decarbonized, merely the carbon instruments remaining as results-based financing tool will not work. It has to find, and that's where the legal nature of the units becomes quite important if we have to really unlock finance.
Thank you, Perumal. You took the one for us. But one question, in case there is no further questions from here, may I just abuse the luxury of being on the stage with these 3 wonderful minds? You mentioned the use of innovative products, and probably using blockchains and stuff like this, and then linking it up to exchange systems, ACX in Singapore, for example. I'm thinking that, okay, for more evolved, where you've got more advanced, rather not evolved, but more advanced systems already in place, this might seem like a doable thing, right? It is a desirable option, right? We know the merits of technology and all of this that it can enable. But the thing with desirability is there's a necessary desirable and there's a unnecessary desirable, a luxury in that sense, right? But here I wanted to go to you, Fonso. Do you think that based on the constituents or the countries and clients that the AfDB is serving, do you think there is an interest in exploring the use of such technologies? Or is it more the case that first developing the infrastructure to access these technologies is going to add more noise instead of a proper signal. Am I thinking right, or is this? I'd just like to know a bit more of your perspective on this.
Do you want to start first?
I prefer that you start, Alfonso, and I come after you, because I have issues, but I wanted, as you are senior in the bank, I need to have your visa, and then I will come with you. Please.
So, the technology may be, beyond being a good idea on paper, there's a question of how can it work in an African country. Because obviously, even whether it's a hard infrastructure, there's going to be a commensurate soft infrastructure that is needed for it to work and to also be sustainable over a period of time. So if it's linked to possible, investment opportunities, if it becomes a good input into unlocking capital in the long run, or connecting to new market opportunities, then we can justify, investment in it. But it's always very important to be able to say to what extent, is countries, are they ready for this kind of infrastructure at the moment? A few countries in Africa, maybe, but not all of them. And it's very important that transfer happens, but it creates value in Africa. So I'm keen to learn more about it, and if it's something that our facility at the upstream window can do, then obviously we can justify the value that it creates. Okay, sorry, that was me. I'll still keep thinking about it, Adrian.
Well, let me integrate with my colleague Alfonso.
It's on.
It's on, okay. So let me share with the audience a very good storytelling. It happened during the last visit of His Excellency President Trump to United Arab Emirates. This last May, I had the honor to be invited for a business dinner where at that time he just left the cabinet. I'm talking about Elon Musk specifically. And at that time we were talking about the initiative that now UEE is running with it, which is creating G42 Hub to be the global AI. And Elon Musk said a very good point. He said, UEE is ready, as exactly my colleague Alfonso mentioned, is ready to have such a kind of AI global hub. Are you ready for this infrastructure? Specifically, Alfonso, you mentioned, right? And His Excellency Sheikh Tahnoun bin Zayed, who is I cannot count all his position, but he the chief security advisor of the UEE, the president of Fab Bank, the president of G42, and he said, yes, we are super ready, and you will not imagine how we can proceed. I can tell you today we are early September, they started to put the superstructure for the G42, where basically Google, Amazon, the old companies, even the company of Elon Musk, Tesla, they are all there. So what I wanted to say here that's exactly the issue of what to call it, operationalization of carbon market integrity. Sorry, as Vermal was mentioned. To create market integrity, imagine that there is a supply and demand developers, they are coming. And with very high tech like blockchain in Singapore is happening. And those developers are not ready with the infrastructure to credit their systems. I mean their carbon credits. Then they will have some kind of lag between the readiness of the system as blockchain and what's happening between supply and demand. So that's why we came up at the end when we discussed that. By the way, the company have done ACX, the carbon exchange in Singapore, is basically Mubadala, which is the holding company of Masdar. I believe most of the people here knows Masdar very well. So the holding company of Masdar is called Mubadala, plus another conglomerate owned by Sheikh Tahnoun bin Zayed as well is called IHC. That's the same consortium that we are bringing for this EGCX in Egypt, and we decided based on discussion on what is really the infrastructure readiness. As Alfonso was mentioning, that the best way to go for a combination between semi-blockchain, meaning that the system for crediting the carbon credits, it has to be for basically for the transaction or the tokenization will stay automated, but the transaction for registry has to follow the credited partner, which is in that case, it will be NASDAQ of United States, as well as IHC together. So we're trying to bring something what could be operationalized within the system in Africa, just to make the system really quickly coming into the readiness level and make deployment of transactions. That's exactly the case. I hope that will help. But thanks to Alfonso for his starting on this.
Thank you. Well, I'm clearer. I could hear the moans of disappointment when I said we'll go into another session before we have lunch. So, okay, but can we just do this if we are to finish in time? Can we just have a slightly shorter lunch and a pinky promise of coming back on time at, say, this is 1:40 now. 2:30 sounds good? Yeah? Okay. Then we'll start at 2:30, and then we have one more session where we will talk a bit more about the demand side of carbon markets, and also the foresight demand coming from MSCI work, and also what are some of the existing channels. I think Perumal has on various counts kind of alluded to the existing demand channels, but also where most likely 6.4 demand is going to come in. So we won't spend as much time on it as we've indicated in the agenda. Nonetheless, it is important that we talk about it. So we'll shorten that one to get back on time. Okay? Bon appetit, everyone, and ci vediamo. Bye. Welcome back, everyone. We are still missing a few folks. Okay, now we're going to go back into our session, and this one is more about understanding the demand and the buyer, the demand and the market potential over the extended period of Article 6 in particular, PACM credits, but also in general about carbon markets. Once again, we'll be walked through it across the time horizons by Juana. And the MSCI has done a very interesting work where they've looked at different forms of carbon markets and how they're expected to evolve based on certain scenarios. I'm not going to over-describe it. I leave it to the pro. Over to you, Juana.
Thank you. Thank you, Subar. And well, yeah, hope you're not bored with my voice still, and thank you for coming after lunch. Hopefully here I have some graphs and numbers that will help keep the attention focused after lunch. So for this session on looking at the demand drivers, and I want to kind of to take a outlook of what we see with our forecasting on where the Article 6 market can head. And I would like to start by setting the scene with a bit of data on the state of play of the market at the moment. I will go quickly through some of this because my colleague Bjorn already touched on some of the points. One thing that I wanted to say before I start is that I'm not going to be covering the advancements specifically on the Paris Agreement crediting mechanism to get it up and running, because although we do track it, obviously the UNFCCC team is way better at explaining this, and it's what most sessions have been focused on. What are the signals we're getting right now? So from the sovereign demand, we have seen that their interest has continued to increase at a slower pace after the past negotiations in 2023, yes, but it's still increasing. And one good thing is, if you see the difference in colors, is that now we have about, I think Bjorn gave the number, about 70 agreements before. Out of those, 30 are already implementing agreements. This means that they have reached their last step for then both parties to start agreeing on methodologies, projects, and in the future approving those projects. Out of those, and to echo Alfonso's point on the shift on the region's engagement, out of those 30, 1/3 are from sub-Saharan African countries. So we do see that the region in Article 6 is taking a different role from before, and now it's setting the trends and being at the front runners instead of following or being shy in how to engage with the market. Oops. Oh, it's not showing the map.
Keep clicking, it should.
No, it's going to the next one. Okay, sorry, but so here is that although agreements are advancing, what we're seeing is sovereign demand is concentrated while the supply is spread out. You saw Bjorn's chart, the Sankey chart, with all the lines showing the buyer countries and seller countries. I had a similar one here. And what we see is that there are over, I think, 40 countries on the seller side, while the main buyers are just a handful. Switzerland, Japan, Sweden, Singapore. While the supply is fragmented, and the potential countries range from Latin America, Africa, and Southeast Asia, and demand is still very concentrated and needs to be grow in numbers for the market, the sovereign market to be unlocked. Now, in the supply, we are seeing some supply countries, some projects, VCM projects, that are now receiving authorizations. We're tracking, as I said before, the LOAs. Here is just a snapshot of our tracker of projects with LOAs. The number of projects, caveat here, it's each project that might be divided from group projects, so that's why it's 66. In general, when you actually also look at group projects, the number is quite lower than that. The supply is still constrained by the readiness bottlenecks that we have been discussing in the past days. And what I want to say here is that the projects that are securing the early authorizations are well placed to supply to the current demand and the evolving schemes that I will show some more later. But CORSIA demand in some compliance schemes, such as Singapore's, that is requiring credits to be Article 6 authorized. Prices. There have been lots of questions on prices and the lack of transparency and signals from prices in the market. So we've been trying to track everything we can that we see. This is all from publicly available information on correspondingly adjusted credits prices. Here we have transactions, but also some indicative prices from offering and intentions. And what we can say so far, this is still a small number of transactions, is that there is a clear suggestion that there is a price premium for correspondingly adjusted credit for ITMOs. To give some references, for example, for energy efficiency, our price index is around, VCM price index with no corresponding adjustment, is around $3.5. Whilst in this chart, you can see that the energy efficiency projects are around the 10, 20s. There's one even over the 20s. So that is a big difference. I would be very interested to talk to all of you who have more pricing information and to work together on how we can bring more pricing visibility to the market. We, as I previously said, have our indexes in which we anonymize the project information and put it in a way that it can bring transparency to the market, but it also allows for the confidentiality in the transactions to be kept. So yeah, I would love to talk more about this. And here, this is the first time I'll say it, just to keep an eye on our future developments in our space, because we're working right now on some new developments on Article 6 prices that we will be launching soon. So now let's get into the market outlook. This is our global credit demand retirement forecast medium scenario. This is from currently what we do is from current demand we project, and from the different sources of demand, which here are voluntary climate targets, that could be net zero, neutrality targets, compliance system, sovereign demand to meet their NDCs, and CORSIA, how this we see that will evolve in the future based on different assumptions. And for 2030, our projection from the media scenario showing that half of the market demand would be for Article 6 credits, or could potentially be for Article 6 credits. To clarify here, this is also including compliance schemes demand, which some will align with Article 6, but others might not. This includes CORSIA, sovereign, and compliance. And these are all ITMOs, what I'm referring to as Article 6 credits, so authorized credits either from 6.2 or 6.4. You can see in this chart that there is a jump. If we start from 2025, there's a jump in 2027, and that is driven by CORSIA demand. In the short term, CORSIA is the main driver for demand of the Article 6 market. So I'm going to go a bit on detail on our CORSIA projections to give you a sense of the size of this market. CORSIA offsetting requirements are driven, one, by aviation traffic growth, and this is how we project demand, technology adoption and free renewal, the use of SAF, for example, operational efficiency improvements, and SAF, sorry, so technology adoption and then also the use of SAF. And the demand will also be driven by geopolitical factors such as the countries that are participating in the scheme. For phase 1, still voluntary. For phase 2, it will be mandatory. Country regulation and enforcement, and the airline's compliance on those regulations. So we look at all these factors to project future demand of CORSIA requirements. And as you can see here in the chart, the demand for CORSIA phase 1 could be up to 163 million tons. This is in the next 2 years. And we are taking a fairly conservative approach on aviation traffic growth. If you see IATA's numbers, for example, this will be higher. This is a demand that is completely required to be Article 6. It has other requirements, methodological and standard requirements, but it will need the host country authorizations for it to be eligible. So that's where the supply right now is constrained for CORSIA, and it's because of the readiness to apply the corresponding adjustment and also the willingness. And the willingness comes from the decision-making that all of you as the policymakers on this have to decide on to which extent you will correspondingly adjust credits, what type of credits you will correspondingly adjust, how do you ensure that that doesn't undermine meeting your NDC targets while you also get the development and finance and climate finance that's there. And yeah, that we understand that is a very complex issue, some complex issues to tackle, and that's where all the technical assistance that the UNFCCC and other organizations are providing becomes fundamental. And one of the fundamental topics we do see right now is on setting those project types that the green list or the white list that you will be willing to correspondingly adjust. That will give market signals and clarity to where should project developers, investors be looking at for what project types, and if possible, setting specific targets and numbers on what are you willing to correspondingly adjust by years or by a certain period. It doesn't have to be completely until like the next 10 years, but then some clarity, some signals to the market would help on tackle that supply. This is our CORSIA supply and demand gap for combined scenarios. So if we take a more pessimistic view on how readiness will increase and how much willingness there will be to apply or to give out corresponding adjustment in the next 2 years, we see that actually most of the scenarios, even if we take a more positive approach, are that there will be a lack of sufficient supply to meet the demand for CORSIA. So the shortage could be between the 12 and the 64 million tons. There's only one scenario in which there could be a supply bigger than the demand, and this is if you take a very pessimistic view of demand, and this is that countries decide either to not engage in CORSIA or don't implement, or airlines do not comply. Potential costs. So what we do here after we have our demand and supply curves is that we identified what's the potential cost that we could get under the different scenarios. And CORSIA eligible credit prices for phase one are estimated to range between the $26 and the $63 per ton. And up to the fourth phase, or up to 2035, this could go as high as $124, which, well, it's a huge difference from what we've seen in the CDM or the prices we've seen at the VCM, closer to some prices that we are seeing or we could see in compliance schemes, national compliance schemes. Yes, so this is the compliance costs. I won't get that much into that. And just to close here, I also want to share our global carbon credit market size estimation. This includes the Article 6 credits, but also VCM, or what doesn't have a corresponding adjustment. Here I just want to highlight, I first gave you the numbers on the retirement demand. That's the maximum that we could get. But how we calculate the market size is by crossing what are the potential supply, and the supply projections, we do it with our granular development cost curves by project type, and also we then add the willingness to pay, in which we find an equilibrium price, and that's how we get to the market size that the global carbon markets could reach. Right now, the market, it's about $1.5 billion as of last year. Our estimations is that in the next 5 years, by 2030, this could increase to 7 to 35 billion tons, depending on unlocking that demand and supply and really being able to overpass the integrity issues that we had seen in the market, that, as I showed before, we are moving forward with that, and there have been big advancements. On another hand, the supply issue on corresponding adjustments, and obviously also voluntary demand, companies complying with their voluntary targets, countries setting completing their compliance schemes that are on development, and so on. So yes, that's my presentation. This is just some of the offering we have on Article 6 in our platform. Thank you. Happy to get your questions.
Is it on? Okay, there we go, there we go. Hi everyone, Kia from Marubeni Corporation, Law's Japanese Trading and Investment House. My team does carbon across sub-Saharan Africa. So I have a question around the market. So how do you see the voluntary market going once Article 6 is finalized, coming up to 2030 and beyond?
Thank you, sorry. So how we see this is that by 2030, Article 6 market will evolve and will take up to half of the demand. We don't see them as competing demands right now, because what we assess as Article 6 is sovereign demands to meet their NDCs will require a corresponding adjustment. Compliance schemes that are aligning with Article 6 already, such as Singapore, such as South Korea, is planning to do, and others, and CORSIA. There might be an overlap in demand on voluntary with MUs, so like all the PACAM credits that do not have a corresponding adjustment, which we don't have a way to assess so far and to estimate. So as you can see here, we see both continuing to grow. There are certain periods with CORSIA compliance where Article 6 will peak. With the CORSIA compliance periods, we see also closer to every NDC cycle that also the demand from the previous year will peak. And so will, similarly, the voluntary demand when they are approaching their 2030 targets or their 2050 targets, but we estimate that to continue to increase as well.
Gracias, Juana, for excellent presentation. I believe that you covered everything about the existing market. But now we have to realize that we are going through a different environment of different world, which is the Paris agreements, which are creating or has already created new rules. No? In this scenario from your presentation, I could see one bottleneck that is affecting I would say the existing carbon market, is the authorization letters. However, but at the same time, in your presentation, you also mentioned that you could use the voluntary market that doesn't need an authorization letter and go to CORSIA. So why they are looking for authorization letter, whoever is implementing voluntary market activities, is they want to go to the CORSIA because they could do it freely. And why is that happening? Because from my point of view, is you're requesting authorization is because the developer wants to convert that into an ITMO, because it already has an authorization and will have to fulfill all the requirements of 6.2. But then there is this kind of belief that, no, because the countries are not giving the authorization, they cannot move the carbon market. And in your projections, the voluntary market is still moving without the authorization letters. I want to understand that difference on your projections. And additional, another question. My understanding is that even if it comes from the voluntary market, and if it goes to CORSIA, CORSIA is in a way, in another one, obligated to report it to UNFCCC. Correct me if I'm wrong, because I could also do a double counting. If I don't actually register whatever that credit went to CORSIA and use it for my own NDC. So how in those things are you, trying to structure all these elements? Thank you, and good presentation.
Thank you, Eduardo, gracias. I will start by clarifying, and sorry if I gave the wrong message. CORSIA does require letters of authorization and corresponding adjustment for all of the credits, for all of the compliance that will be used through carbon credits. And this is to avoid double counting and to ensure that it's not used the same credit for two international targets, such as NDCs and the CORSIA aviation target. On the different demands, yes, there is indeed still a voluntary demand that is evolving and that does not require a corresponding adjustment, where existing projects or upcoming projects can still look into, and that we also foresee that it will continue to grow as the market grows. However, if you want, and this is something that we are getting more from buyers when we talk with them and we see, voluntary is voluntary. So it doesn't provide the certainty that a compliance market does provide. So many of investors are looking now into how can we tackle compliance markets which provide a certain demand that we can then supply to. And this is what CORSIA, being a, I would say, blended compliance, like international compliance system, does provide, and what it also is required in the next 2 years. So that's where the bottleneck is at really tackling that, taking the advantage of that demand that CORSIA can bring for their first phase by supplying the correspondingly adjusted credits that it's needed.
Yeah, from my side, like I think the 2 cents, like we don't run big models, Eduardo. So I think like from our perspective, there are 2 indicators. Like I think from following up from the past question in terms of the voluntary markets growing or Article 6, like what we are generally seeing, like I was saying that like Joanna can correct me, like the peak of the voluntary markets was in 2023, right? So that's where we had the highest level of transactions that happened in the voluntary market.
There's steady.
Yeah, and then like if you really see the distribution of between among those markets, there's something that comes from 2, like apart from other, if you divide them into 3 component, like 3 parts, in terms of the demand centers, the way that we looked at is that quite a number of them, of those entities are legal entities registered within the EU, for example, right? Where there might be a shift, like in the earlier question in terms of is the volume is going to be 50-50 as going forward, or when Joanna's elaboration of what does Article 6 means, that whether it is for domestic compliance or international mitigation purposes, and the other one is the other mitigation purposes, right? Like currently, like if I wanted to have a product and product called should be called as a net zero or climate neutral, I would be able to compensate. Still calling it as voluntary, I will be able to use, because it's voluntary from I as a company or a corporate owner, I was able to do. But what we are seeing is there is a growing trend in some of the countries in terms of changing legislation in order for you to make such claims. And then I see that there could be the OMP markets, like that could shift a bit on the other mitigation purposes in terms of the overall volume between the Article 6 and, like as I said, like we don't have that much of data sets, like we do like a minuscule running of looking at like what kind of policy implications that's coming, right? And then one of the things that like the CORSIA phase 1, which is quite clear, I think even in our numbers, that's the demand that we are looking at, somewhere around 140 to 160 million, because as I told you, like the 580 million was the emissions in 2019, and 85% of that was the target that is set for this CORSIA scheme to call as carbon neutral growth 2020. And with the mid scenario in which that the CORSIA is working on, that's the demand that we also have worked on, somewhere closer to that, even in the mid recovery scenario of CORSIA, because they also run a low, mid and high recovery scenario for the international aviation sector, and that's the volume that we are looking at. But from the political perspective, like I think what probably you and I will be doing is that like when we have new agenda items coming up in our process, which says when all of us will be asked to advance our net zero targets asking a certain set of countries to advance their net zero targets to a period before 2050. And there is a conversation happening about talking about net negative. This is not so new. I think like in 2024, we did had an agenda item which talked about net negative emissions. Is being introduced by a group of parties in terms of when you wanted to move from 2050 to 2040 for certain countries, and they wanted net negative to be used. And again, that's a market that will have a huge demand for removal sectors. And I always used to use these numbers is because even if we all are achieving net zero by mid-century, what does the science tells us is that we would have a ppm in the atmosphere of close to 720 ppm. And where we have to be is 420 to 450 ppm. And if you have to bring down the concentration, CO2 concentration from 720 to 450, then it is equivalent to about a removal of 12 gigatons each ppm. So you have to multiply 12 multiplied by that 300 is what you need to remove from the atmosphere, even if you wanted to meet the net zero targets with 450 ppm. So that's where in our inside demand that when we run within the UNFCCC, we are looking at from a political basis like how our negotiations also evolve in terms of when we ask everyone to move towards higher ambition, people moving in an advancement. And that's where I think I'm going back to the first question of will the voluntary market share remains the same or not? I may be quite naive, which is like I even think like at sometimes around 2035, probably voluntary market price would be much higher than compliance, but the volume will be much more marginal. That's my sense. The reason why I'm saying again is that the type of the removals, like when we all move, when we have this pressure of moving towards this, we all as developing countries would be applying Article 4.4, which is we all will be moving towards an economy-wide NDC, not an absolute in targets, but based on our own circumstances, we have been asked. So I'm talking about NDC 5.0. And when we move towards that at the time of using 4.4, then what we will be left out is with high cost mitigation options that will be engaged in the voluntary, and the mid scheme will be working on compliance markets, because we will be going to talk about compliance to a compliance market transaction, and then voluntary will be looking at new technological advancements and new removal technologies that might be taking up. This is, as I said, I don't have numbers as you know to run around, but just if you're talking about supply and demand, I wanted to send that positivity around. It's not about limited to whether it's 14 gigatons, 13 gigatons, 12 gigatons. I told 1 ppm of CO2 concentration to be removed from atmosphere is equivalent to 12.5 gigatons, and that's the market size and the volume that 12.5 gigatons of CO2 has to be removed in order if you have to reduce 1 ppm of CO2 concentration in the atmosphere according to the IPCC. So that's where I see that there would be, I will be 85 years old by then, but I'm very sure that I'm very optimistic that the carbon market will thrive and survive. And the immediate demand, as I said, is like what is there right now in our hand is CORSIA. And then again in CORSIA with different scenarios, I do not know, there's a question to you, Jana, is like, have you looked at some of the transition credits? I informed earlier that like we are continuously talking to the ICAO Secretariat, and the SBM has agreed not to apply, because we always claim that from 2016 UNFCCC mechanisms are already eligible. So we would be providing information, and the TAB has to make a decision of whether or not the transition activity credits will be used by the CORSIA. Will that change the supply situation, or is it already part of your assumption, like assuming that some of the transition credits would be authorized?
It is not. Our CORSIA projections are based on the approved standards so far. And to answer your question, that would depend on what's approved by ICAO. Does it approve PACAM just to have a stamp? If it's PACAM, everything is approved? Or is it going to go as it has with other standards, that it approves certain methodologies from that specific standard? And that would drastically change on how much PACAM could deliver for phase 1 and phase 2, especially for phase 1, because as we know, the first supply coming from PACAM will be the CDM transition credits. So it will change completely if that's approved or not by ACAO, basically, in the next year.
So we need to closely watch the TAB decisions. I've just seen trig around, and also the ICAO assembly, which is coming up, right? Because the other question that I wanted to ask, like which probably as you modelers remember, is one in relation to when you said like every country which has a revenue ton kilometer of more than 0.1% will fall into the compliance under the ICAO from 2027 to 35. But Chicago Convention also has this specific, a unique feature of reservation being filed by countries, right? So China has filed a reservation against the 2016 and 2019 Assembly resolution on CORSIA rules. So how do you see that, like, did you looked at in any of your assumptions of, because why I'm saying is that, like I said somewhere else, like, close to about 69 to 70% of the demand for CORSIA is going to come from two set of operators, one from Asia Pacific and the other one is from the European operators, right? And within Asia Pacific, the China, Eastern and Chinese, no, the US, like I'm saying, are the remaining, right? Like the 70%, based on the air traffic, the current data, our assumption was around 69% of the demand on CORSIA will come from two segments. One is the EEA operators, and the other one is the Asia Pacific operators, which includes Indian Airlines, the Asia Pacific country, Singapore Airlines falls within that. So within among those 34 comes from Asia Pacific, about 67% or 63% comes from China. And if a country has a reservation of the application, because as you remember that the Chinese CCER is no longer eligible under CORSIA, right? Quite a number of JCM went into CORSIA application and they have not been approved upon. Are you seeing some kind of, in your modeling, are you looking at those geopolitical risks and the convention risks in terms of the, like in UNFCCC, it will not be possible because once you sign, it's signed, but like in their SARPS process within the CORSIA, a country can also raise a reservation and they can apply what they want. That will change the whole equation. So that's why I wanted to understand.
Yes, very good point. And we did in our last CORSIA forecast report, which, by the way, there is an available free version summarizing some of our key findings that you can find in our webpage. We did a sensitivity analysis on different geopolitical scenarios. So we modeled if the U.S. decided to not comply, how would that affect demand numbers? If the others, such as China and India, were to follow, how that would affect, and then if other countries, such as some South Asian or some Arab countries are from the Gulf, were to follow, how that would affect. And when we say the lowest, the tight demand, like the lowest demand possible, and that's why I was mentioning, it would be those if the countries decided not to implement and the airline, or not to put in legislation and the airlines just went with not complying, basically, yeah. Thank you. Sorry, just wanted to say on your previous point, our demand also grows after 2040 because of net zero, of the net zero targets, and that's why voluntary grows so much. However, from the sovereign, we don't have enough signals because there are not enough targets set. Also, the sovereign players that we're including in the demand are either the ones that have already said that they are willing to use corresponding adjustment, like to use Article 6 to meet their target. If a specific quantity target is available, we go with that number. If not, we estimate what could be a potential demand. But many others that have not clearly said, we're taking it with a fairly conservative approach. So as 2030, like as the new NDC round starts to emerge, and if countries start giving clear signals on their purchase commitments, this could be expected to grow the sovereign demand, our non-version sovereign.
Thank you for your presentation. I just have a question in relation to the criteria, because I have seen that you will assess the NDC ambition against a net zero blind budget. Just to recall that a net zero under the Paris Agreement is not a requirement per country. It's a global goal, a global net zero. How you downscale that global net zero to know what is the objective for per country before assessing the achievement of the NDC against that number, instead of having that not all countries have a net zero target, because it's not a requirement. It's a global net zero we are looking for under the Paris Agreement. Thank you.
We can continue.
After this, maybe she wants.
Just one sec, because this is from the previous presentation, so I want to close that. Great question, thank you. And yes, indeed, it is a global net zero budget. So the task there was how to downscale that global net zero to the country level. And there, as you are aware, and there have been huge discussions around how you do this, there is a simple economic approach, which would be the cost-effective approach on how is it most cost-effective to meet the target divided by countries. But that is not accounting for historical issues and for developing needs of countries. So what we decided to take was a blended approach between these two. So we used the cost-effective projections based on the Network for Greening, Finance, and GFS scenarios, and then we put into those GRAS University's methodology on fair share, on how to account for fair share and that budget. And that distributes the carbon budget according to the country's development needs. So it takes the Human Development Index, and then it says, what would you still need to meet your development needs? What would you need to emit? And that is accounted in the curve. And also population growth from countries. So we blended those two, and that's what we're using.
Hi, yes. So I think one of the big things that's very interesting and sort of as a party is difficult for us to understand, and I want to see how you account for that in your models, is, I mean, everyone talks about the CORSIA supply shortage. But at the end of the day, there is some supply, and it isn't being taken up by the airlines. How do you account for and model, or where do you assess that lag? So what do you see as supply begins to rise in available, eligible CORSIA units? How do you model out, how do you see the challenges in terms of going from achieving that supply to actually having airlines to begin making these retirements? Because I think what we've seen from our initial engagements with different airlines, and unfortunately one thing that's always very scarce at these conferences are airline representatives, is everyone's waiting for the first mover. And I think as parties who have a vested interest in getting that sort of, those retirements happening, how do you model that out, and where do you see are the biggest risks and drivers of that lag between creating supply for CORSIA eligible units and actually beginning to see proper, well-done CORSIA retirements? Is it more on the demand side? Is it based like a structural misunderstanding, or airlines not able to navigate the CORSIA ecosystem? Or are there maybe other factors like the political risk you mentioned before, airlines effectively hedging to see maybe we don't have to pay after all? How do you sort of see those factors?
Sorry, what party are you?
Zimbabwe.
Zimbabwe, thank you. Well, to say that there is Corsia supply is a bit, there are two projects, I believe. That is quite small for any buyer to decide or to take the step. Also, they will actually, the phase finishes at 2026. They will actually need to comply in 2027. So I think it's, if I was a buyer, I would also be taking a let's wait and see approach, also because the supply is not there to pick from. But it is indeed that there are some countries that already have their regulations in place in which the aviation sector will be already covered and should be already considering how they're going to meet their target. And some airlines are, many, some still aren't, and that is true. We're also engaging with airlines, and we see that some are deciding to not go that deep into Corsia still until they have more clarity on regulations and also on the potential supply. They also have questions, and one thing that was thought before is that, oh, this is a compliance system, so airlines won't care about quality, and Corsia already is considered high quality because of their rigorous process on approving standards. However, they are still concerned on the reputational risks they carry for any project they're buying. And that's one of the drivers for us to come with our Article 6 integrity score, is to also give clarity on what other factors they should be looking at when buying the credits. So yes, I think the demand will definitely also depend on the countries, but we are also, I would say that we are seeing airlines engaging more, at least with us. Some have already approached us to help us organize their whole Corsia strategies, and even some from countries that wouldn't be required to yet in phase one. So there is interest and commitment, but yeah, there is a lack of supply to start engaging and to start even bothering, because the deadline is still far. Far is not that far, but from a buyer's perspective, that could be far, and the supply still needs to be unlocked.
Okay. In case of no further questions, sounds like a court recording, but we'll move on to the next session. Slight change in the plan for the rest of this evening. Good news, we might actually finish early. And what we're going to do is we're going to club the last two sessions together. We have a choice now. Either we can go for a quick coffee break at 3:30, then we come back where we'll just have some of our partners talk about what kind of capacity building support they have to offer and showcase some of their key projects. After which we have to do one quick round of getting your inputs on some things, and we call later bye-bye time. Sounds good? Do you want to go on a break now, or should we go with the session first? How many want to go on the break right now? Wow, so much excitement. Excellent. All right then. Okay. Okay, cool. Then in that case, what we'll do now is that, yeah, I have to think through our game plan. So we are going to go into the final session where I wanted to have some of our partners. May I just invite Andy from UNEP Copenhagen, Sven from the GIZ, and from UNIDO's side we have Petra Schwanger. Oh, sorry. Okay, all right, you've heard me enough. I'll hand it over to Sven.
Yeah. Thank you. Thank you, Zubair, for the introduction and the opportunity to speak on GIZ support. Can you hear me? Just a second. Is it better now? Okay. Yeah. Okay. I have to move a bit closer to the to the mic. Sorry. So yesterday we already heard a bit from my colleague Rita on the support that's more related to NDC integration, and what I will focus a bit more today is, sorry? Oh, okay, I can click. This is next slide, yeah? Okay. To where? Yeah, I mean, I can already start where you figure out the slides, Zubair.
I think it's the wrong presentation put on, but while we try to fix that...
Yes, I can already start, no problem. Okay, so while Rita was focusing yesterday a bit more on the NDC perspective, I'll give a snapshot on our approach at GIZ for capacity building on Article 6. And while some of the examples that I will mention now are more focused on Africa, I also wanted to note that, of course, very similar support is also provided in other countries that we are working with. So what do we offer in the carbon market space? Ideally, you would be seeing a presentation now with 3 pillars. Will come up shortly. Yes, great. Can you, Zubair, jump to the next slide? Next slide. I have it here. Okay, great. Okay, perfect. I'll skip the first part and jump right into the interesting slide. So overall, our support is structured around 3 main pillars. That is everything related to Article 6 readiness, that is capacity building, and that is pilot projects and sectoral approaches. So in Pillar 1, readiness, we focus basically on developing Article 6 strategies, legal framework, and institutional structures. So everything what we believe is the cornerstone for high integrity participation in carbon markets. Other areas of work here are building technical capacity for key implementation tasks such as authorizations, a topic that has been discussed quite a bit today and yesterday, accounting, MRV, registry operation, and reporting on Article 6 under the enhanced transparency framework. And one growing area really of our support is also the area of digital tools and solutions, which we see as a key enabler for transparency, scalability, and integrity in carbon markets. Beyond readiness, and that is the second pillar, capacity building is really I would say our bread and butter at GIZ, because we believe that institutions are only as strong as the people who run them, and that's why capacity building is really at the heart of what we do. So here it's more about more hands-on training of government officials, negotiators, private sector, civil society. This can be technical guidance on how to design an MRV system, how to use digital tools, and even AI for project monitoring, and sometimes that means more of a fundamental awareness raising, looking into opportunities and challenges of voluntary market participation. And I wanted to note that especially here in Pillar 2, I think what's really important for us is our local presence of GIZ offices in the different countries, because we believe that capacity building really is a long-term process. It needs to be adapted to each country's institutions and political context. And it's not something that you build with one workshop or two workshops or even 3 workshops. Is really supporting the process consistently over time and not just a one-off intervention. And lastly, moving to the third pillar, this is gearing more towards preparation and implementation of carbon market projects. And here we work on designing, preparing, and at times also implementing pilot projects that demonstrate how Article 6 or even voluntary carbon markets can work in practice. Because in the end, and that's also something I wanted to stress when it comes to our approach to capacity building, is that seeing projects in practice, the learning by doing approach, I think is a very, very powerful approach when it comes to the support that we are doing. Next slide. Yeah, so examples in Africa include work on green cooling in Ghana and Southern Africa, e-cook stoves in Rwanda, and decarbonization in the cement sector in Malawi and Senegal, just to give you some examples. And overall, this can be summarized of what we call a holistic approach, where we try to bring these 3 pillars that I mentioned together. So readiness, training, and pilot activities reinforce each other. Because in the end, pilots feed back into national policy frameworks. Policy frameworks, on the other hand, give confidence to private investors, and capacity development ensures that officials, project developers, and civil society all understand their role. In a nutshell, what I'm trying to say is that you cannot do one thing without the other. If you only focus on pilots, they may not scale. And if you only focus on laws, they may sit unused. And if you only focus on training all the time, people have nowhere to apply their skills. So really, this is the key message of the approach that we are trying to implement. Very briefly, we'll not use a lot of time on this, just a little snapshot of the activities that we do in Africa. So we're quite present in a number of countries where we support on some of the topics that I already mentioned. And yeah, one area I just wanted to flag towards the end of the presentation is also regional collaboration is something that came up quite a few times. And I wanted to highlight one initiative that is the Eastern African Alliance that we helped set up as GIZ in the last couple of years. And this is also very important to know that the Eastern African Alliance is, you could say, the younger sibling of the Western African Alliance, which was created earlier than the Eastern African Alliance and has been really an important source of inspiration when developing the alliance. And I think the alliance, or better, both alliances are really great because they provide countries with a stronger collective voice, help pool expertise and resources, and really serve as regional hubs for knowledge and training. And they have already produced a number of really amazing products. Some of them you can see here on the slide. So yeah, to sum it up, there's a lot of buzz around carbon markets. And I was looking actually at the Africa Climate Summit agenda for the next 3 days, and I was surprised of how many events there are focusing on carbon markets. And it's also interesting to see that many of these events are actually organized by I call us a bit the Article 6 bubble, but I see more and more actually actors, stakeholders outside of this core Article 6 bubble actually organizing this event. So that's exciting, and we believe that carbon markets offer big opportunity to mobilize finance, spark innovation, and raise climate ambition. But if we are very honest, carbon markets can, as we have seen in the last 2 days, also quite a maze to navigate. They can be very, very complicated, to put it mildly, and there's still a lot of open questions on the table which need to be addressed and which we are happy to support. And I can only say from our work at GIZ, we could also really see this momentum. We are getting a lot of support requests on Article 6 and do our best to respond to these requests. And very often, that's the last point I'm trying to make, is that we can do this only together with other development partners, and also interestingly, private sector institutions come into the space more and more. And yeah, looking forward to working together, and I hand it back to you, Zubair.
Thank you, Sven. I'll actually hand it like a hot potato back to Petra.
Thank you very much. Good afternoon. Thanks. We are starting the cooperation already here. Pleasure to be here with you today. I'm waiting also for the presentation. Maybe while the presentation is being uploaded, a few words on UNIDO for those of you who might not be so familiar with UNIDO. We are the agency that is actually that has the mandate to promote SDG 7, which is an inclusive and sustainable industrial development. We have our headquarters in Vienna. We are an independent agency, so we have our own member states, 173, and we are a technical organization. Can I have my presentation? Good. I don't want to bore you. No, the next one.
If you click continue. Oh no, these are the backup slides.
Okay.
No. It's UNIDO.
Good. Thank you very much. I think we can get started. In my division, which is the Climate and Technology Partnership Divisions, we have established a new entity on global carbon solutions, and I wanted to flag a new program proposal, which I did not coordinate with Sven before, but I think there are a lot of similarity, and this is also why we are going to have a coordination meeting pretty soon to see how we can also join forces there and not duplicate. We also see the dual need, so helping countries to get ready on one side, and then this should drive to a project development. As we have quite some experience in technical cooperation driving sustainable industrial development, we want to focus the interventions more on driving in a green industrial development. I think that was also mentioned yesterday several times, that carbon markets could also serve, or should also serve, to support countries on their pathway to a green industrialization. On the readiness approval, on the readiness path, we have structured it according to 3 pillars. We have the institutional and legal support, capacity building, and governments, and Article 6, strategy development. All this need to be in place to make a country ready and to really pilot and upscale Article 6 transactions. And what we want to achieve here, you see here legally recognized systems, MRVs, trained actors, clarities, and increased attractiveness for projects. Let me just give one step back. Some countries might already be more advanced on some of these steps. So what we are going to do in cooperation with other entities to see, can we maybe pick up where you're dropping out? And I think we heard this yesterday from Kenya quite well. So if you are finishing, can we maybe come in with additional support in certain areas? So please, we really do not want to duplicate here. We have reached out to many actors and see how we can move forward here. For the project development activities, we are looking into carbon project mapping and pipeline identification. Here again, with a focus on industrial decarbonization. And I want to speak also to the hydrogen, because green hydrogen is a key program in our division, where we're having the global program for hydrogen in industry. And here we are at the moment developing a new methodology for carbon markets under green hydrogen projects. There is already some advancement in the methodology development, but it didn't move on because there were not sufficient projects there to apply it. So we are at the moment with our program active in 14 countries. We have recently received also a global GEF program, and we have identified the first cases where the methodology can also be tried. And I think that was also a question before. So with this, we hope that we can contribute to strengthen national capacity, enhance pilots, and enhance the upscaling of the projects. As UNIDO, we are maybe one of the UN entity that works very closely with the private sector. And before coming here, we reached out to a number of players to see how could they also contribute, how could also the private sector contribute more to making countries Article 6 ready, and to see how can we engage with them stronger. And I think there's a big potential that is not yet tapped fully, that we would like to bring into the plane. This is our timeline. Countries that are interested in joining, please contact us. We would be happy to engage in further discussions with you. And we are looking at the 5 years program, where we are looking into the different elements. And if countries are already more advanced, we can also pick it up where you are at the moment. Again, a pleasure to be here with you. We are a bit of a newcomer here, but I think looking at where countries stand and that things are still going a bit slow, I think we as an industrial development organization can contribute and wish to contribute. So please count on our support and collaboration. Thank you.
Thank you, Petra. Over to you, Andy.
Thanks, Zubair.
Yeah. Sorry, I think our friends at the back can put on your presentation too. This is the UNEP one, not the one I told you, the other one.
Yep, this one.
Yes.
Hi, everybody. Andy Sanusi from UNEP in Copenhagen. I'm just going to go briefly on some of the activities on, particularly on Article 6 capacity building that we are currently working on. Just to note that this is not the whole projects on Article 6 and capacity building, but these are some of the projects that will be, that has a big capacity building components. As you may know, the Article 6 pipeline builds upon the data from the UNFCCC Secretariat, where we work very closely for this project, and essentially looking at making it a bit more simplified. The second project that we're working on, and I alluded to yesterday, is on the Sustainable Development Initiative, and we're looking at how we can incorporate sustainable development aspects into Article 6. And this project sort of helped with the discussions on the SD2 in particular. And lastly, on integrated assessment for Article 6, on ES6, for us here, we work with our partners in having a more integrated framework in capacity building on Article 6 in 3 different regions and 3 different countries. So on a pipeline, I think if you were in the June sessions, you might have seen the preview that my colleague has presented. What we aim to do here again is to promote ambition, integrity, and sustainable development. Essentially, with ambition, making sure that the Paris temperature goal is achieved, consistent accounting through integrity, and sustainable development with the co-benefits and no harm approach. And down there, you can have the QR code where you can access our data freely, and you can play around with the Excel as you please. So how do we do this? We look at comprehensive transparency across Article 6 components. For Article 6.4 in particular, we look at the CDM transitions, where they are in terms of the approval process and register into the new PACM registry. We also look at investigating impacts of Article 6 activities vis-a-vis the sustainable development positive and negative contributions, but also into the NDCs. And these are some of the charts that you may have seen before. What we are currently doing is transforming this into a bit more user-friendly platform, and hopefully it will be launched soon, so you can sign up for any updates for that there. There is a YouTube link where you can see a preview of what we are currently building for the platform, and if you have any feedback, they'll be very much appreciated from our side as well. On the Sustainable Development Initiative, as I said before, with the party-driven policy dialogue, we have contributed to the call for inputs on sustainable development tool development, and also going forward as the tool is being reviewed, we'll also provide our input there. Currently, our current work for the project is piloting the SD tools and looking at how we can improve that for activity participants, making it a bit user-friendly and feedback into the Article 6 SBM negotiation discussions. And lastly, on knowledge sharing capacity building, we heard from participants a couple days ago on the need of further awareness on how to use the tool. So this is what we're currently developing with some of the partners currently in the region. So we will have a couple of webinars coming up for that, so stay tuned. And with the integrated assessment for Article 6, we're currently working with our partners here. We're also in the room, essentially develop a framework for a more systematic framework to support governments in engaging on Article 6 and utilizing this to support countries and analyzing that more on a holistic strategy on mitigation within the countries and in context of NDC, SDGs, and long-term temperature goals. So that's it from me. I also want to know, within UNEP, we have a carbon market cluster. We not only work in Copenhagen, but also in Nairobi, and also our partners in around the globe. But what I want to do is invite colleagues from UNEP if they want to intervene and share their work as well. Thank you.
Sure. Thanks very much, Andy. Appreciate that, and thank you for allowing us to input. Yeah, so as Andy mentioned, I work for UNEP, so specifically the Climate Change and Mitigation Unit. Specifically within that is the, I can if you like. Hello, perfect. So as I was mentioning, work for the Climate Change and Mitigation Unit within UNEP. Specifically within that, it's the UN-RED program. And for those that aren't aware, this is a collaboration between UNDP, FAO, and UNEP. And sort of amongst other things, we provide support across Africa. I mean, we have equivalent teams in Latin America and Asia Pacific as well. And one of these work streams we support on is climate finance, and obviously always focusing on this high integrity and high quality as well. So, yeah, we work with governments really. Essentially, they are our clients. You know, we want to support governments where we can to be able to implement well-functioning carbon markets. But not only that, to properly understand them. And I don't know if he's in here now, but Olifonso this morning, but, you know, to allow them to not miss out, like mentioned on the CDM. And so, as part of that work, we are incredibly enthusiastic about this collaboration efforts. You know, we're conscious that lots of different countries and governments get different advice from different people. It's not always the same, or slightly, you know, not contradictory, but not always in line. We want to make sure that we are not duplicating this work. We want to make sure that when we input and advise and support, it's in line with best practice, but also in line with the other organizations doing this. We don't want to confuse matters. We want to help move them forward. So, to sort of extend our support to basically other organizations doing this, we're in this country, in this continent, we're doing as much as we can, and we want to work together to push this forward. We, so I guess to sort of summarize that, we want to ensure that countries are the most equipped they can to make the good decisions and to make the best decisions, and whether that's negotiating term sheets, trying to get good terms for the emission reductions, when it comes to commercializing it past the readiness, then that's what we'll do. I guess also to add, we have knowledge sharing platforms as well, such as a community of practice. We organize these on a very regular basis to allow people who can't always come in person to be able to join online, and we kind of have different sessions that anybody can join. We're also really pushing this sort of public-private partnerships. We really believe that scale can't be done by public institutions. We don't think that scale can be done just by private institutions. We think that public-private partnership is the real way we can really scale this and use the momentum to build it into the market that it truly needs to be. So as part of that, we arrange events such as in London, we had a sort of supply and demand roundtable, bringing together countries with near-term supply. When I mentioned earlier, the supply isn't quite there, but it's not far off from there. Actually, it's in some cases a few months away, 12 to 18 months for a lot of countries. We want to make sure that that kind of commercial conversation is now already starting by getting people in the room together to actually to do that. So, we want to make sure that the carbon market is an opportunity to development, and want to work with as many people as we possibly can to make that happen. So. Thank you very much, Andy, for the opportunity.
Mic now. Okay, thank you very much. And I think this was just one of those examples of, everyone coming, it's all hands on deck. Given that now we are in the implementation phase of Article 6, given all the interest that we are seeing on Article 6 itself through, we've been talking about how many countries have mentioned it in their NDCs and all. But everyone has presented and I haven't presented, so I feel kind of lonely. So I'll ask my friends back there to just throw up my slides. I would just very quickly take you through the UNFCCC Secretariat's approach. There are, my colleagues from the Regional Collaboration Center yesterday actually gave you a very good walkthrough of some of the forms that our capacity building activities have taken. What kind of support mechanisms are out there? What kind of support opportunities are they providing? That includes in-country support. Can I please have the clicker? All the way there. That includes in-country support, that includes consultations, technical assistance, not just through the RCCs, but also directly through the Secretariat staff members. Well, I will not bore you with the introductory part because you all know who I am, and that's the building where I live, so I don't want you to hunt me down. But just to give you a little procedural background, there was a mandate given to the Secretariat by the parties to implement a capacity building program, largely to bring all the parties up to speed. And this was to be done by the Secretariat, including through, directly, but including through its regional collaboration centers and all partners. Now, this is one thing which I think we should all acknowledge. Sven was talking about an Article 6 bubble, a carbon markets bubble, right? I think when it also comes to the capacity building side, we ought to understand we've got to make it into a raging ocean of sorts, because the demands are pretty much demanding that we give that scale of support as well. So partnerships perhaps are equally important. So one of the main impulses that we've had over this time is to make sure the number one priority on the Secretariat's part is to maintain responsiveness to the needs of the parties. And in terms of responsiveness, we've had a few occasions where we've asked our constituents, our parties, our partners about what their main gaps are. Oftentimes it comes into, bridging knowledge gaps is a critical need, because some some parties are way ahead when it comes to their awareness of rules, mechanisms, modalities, operational procedures, so on and so forth. There are many, and this is also because in a lot of cases, there's a lot of churn within the DNAs or the ministry. So oftentimes the people who've been through events such as these move on, and that institutional knowledge never quite gets built. So we are now figuring out ways in which we directly, but also through our RCCs and other partners, can make sure that there's one, like a non-physical virtual resource, set of virtual resources available to get at least the foundational understanding in place and accessible by all at all times. And in this, I would also give a little shout out to one of our ongoing partnerships with the UNEP Copenhagen Climate Center, where we are jointly trying to develop this. Then there are also other things, and I think we won't go into that because we'll actually hear more about it from the parties themselves. But perhaps most importantly, what is our game plan to respond to these demands? First of all, regional engagement. It can't be stressed enough. From our side, sitting in Bonn, we have the Article 6 capacity building team. We are working together with partners, but the idea is to take it as close to the ground as possible. And in doing so, greater engagement at the regional level. We have the luxury of having our RCCs in 6 of the regions, de facto operating as extended satellites of the Secretariat, with a carbon markets expert there. At least in 2 regions here in Africa, the RCCs are also partnering very closely with the GIZ and the regional alliances, both the West African Alliance, also the East African Alliance there. And here, when it comes to regional engagement, one of the things which is also kind of like the underlying philosophy of what we are trying to do, and here the idea was that we're going to go for a graduated approach. On some occasions, I've called it iterative approach, but all of that is very boring, following what I heard from Beyond this morning, which was a very nice chart where you had talked about a 3-step thing. There's a foundational enabling, and then the third one was market readiness, right? And I think it's the same thing that also then applies to the capacity building approach here. We are working on the foundational part, where some knowledge products which are going to focus on from the very basics of Article 6 for someone who has just joined this space to understand what the whole game is about, what are then the intricacies as you go further, all of that. Then slightly more things enabling country frameworks for example, national framework support, or like there have been a lot of questions asked here and also in our discussions outside, where countries have asked very specific support requests on how to develop positive lists, for example, right? This is just one example of what we are trying to do. But in all of this, responsiveness is the key, and as part of this, we keep consulting our parties, our stakeholders, as much as possible on every occasion, and you'll also see an example of that soon. And one thing that we've been doing historically, and you will see, while I wouldn't say less of that, but you will see a lot more of that happening in conjunction with other things, is that we are not just going to wait until every COP and every SBs or any regional event like this to have a gathering of this sort, to hold a workshop, to walk folks through. We've got to make sure that we hit things at a scale, resources, time. All of this is in scant supply. And when we talk about capacity building, one person representing the ministry or whatever person staying here for 2-3 days, getting trained on something and not being able to relay it or cascade it back to the broader team back home, that actually defeats the purpose of the very capacity we thought we've been able to build. So we've got to keep some of these very real challenges in mind. We are mindful of it. Many parties have reported on it, and because of this, we are also working on knowledge products, as I said before. They would include virtual knowledge products, explainers. We'll have a lot more distilled down version of many decision texts, etc., which are admittedly not very amenable to common understanding or even actionable understanding. So we are mindful of that. And finally, collaborations and partnerships. You've seen, what you see on the panel right now is one such example of the partnerships that we are trying to build. It's, again, not just about the knowledge part in terms of distilling down the complicated decision texts and all. That's something that we are trying to do in-house. But we also understand that every other partner also has their own comparative advantage, a diverse set of constituents that they cater to, who are all relevant to a specific point in this whole value chain of making carbon markets real and high integrity carbon markets come to fruition. UNIDO, for example, works a lot with industrial stakeholders, right? So when you think about activity development, that's perhaps one of those partners that we would be working with to make sure that the right information gets out to those who want to engage in activity development. Similarly with IRENA, it's the same. GIZ has, we've been historically engaged on a lot of fronts, and unless Sven decides otherwise, we want to continue doing the same. So basically this is it. I just wanted to give you a quick view of what our capacity building approach in general has been. It's sustainability, partnerships, actionable support, responsiveness, and most importantly, ensuring that everyone has access to, in Beyond's words, foundational, enabling, and market readiness conducive knowledge. With that, I would stop here and ask you one question. Would you want to go for the coffee break now and we come back and do some super small things and pick your brains for a very small time before we go into the closing? Or we pick your brains, then you go have your coffee, and then you come back, then we have something else planned for you. Who wants the coffee now? Sorry? They want coffee because they... Oh, you have a question? Oh, sorry, I thought you were like, please come on. You'll have to walk to the mic to ask the question. Sorry.
So, thank you very much. I will not take long. Yeah, it's working. The Alliance for Eastern Africa on carbon markets and carbon finance is doing well. However, my concern is on capacity. The person handling it is alone. Is there a way he can be supported by enlarging the territory and bringing in more staff to support the implementation of what you're doing? Thank you.
No, I can definitely support this analysis. Andrew is very much alone, is doing amazing work. And I mean, we had arrangements where we had people supporting him. We tried to support him also from the team. But yeah, it could also be opportunity maybe for other countries, other organizations to come in and support the alliance, which is doing great work. Yeah.
I think what you are flagging is maybe one of the key issues also why we are not moving faster, because we need more capacities, and that means also more warm bodies that are working on this. So we will look at this on a case-by-case basis, country-by-country basis, or organization basis, how we could support this, because this is definitely an issue.
I'll be quick. I know you've heard me enough. Just wanted to ask UNEP a bit more on that framework you're doing on Article 6 readiness, what you are including, and yeah, just looking to see if we can contribute to what we already have in an Article 6 readiness to avoid duplicating, having different then scores, numbers everywhere, which then at the end we're all trying to help the private sector have the right signals, and they up with different readiness of countries and having to deal with that. And I wanted also to use the opportunity with what Daniel was saying on that, yes, supply is still not ready, countries are still not ready, but they're close to being ready. And I forgot to give this impactful numbers on our readiness score for the region, is that out of the 75 countries that we've scored on readiness, 40 would be between very high, high and medium. The only very high country is in the region, and if you add the very high, high and medium, 1/3 are in sub-Saharan Africa. So yes, you are very close to getting there, and it's very close. Good to see that the technical assistance is coming together. I've heard a lot that they do need people, just not, so yeah, thank you.
Sorry.
All right.
1 second, please. Did you want to answer that first?
Was more of a comment or a question?
It was the framework for UNEP, what you're considering in your Article 6.
Yeah, thanks for the question. For our readiness, we're not having, our perspective of readiness is more on a surface level, looking at in terms of whether parties have DNA, whether they have an agreement with other countries. So it's very following the decision of the UNFCCC at the moment. In terms of the integrated assessment of Article 6, we're looking at different elements of it. We're currently finalizing the approach itself and piloting that in different countries. So we're also trying to see what others are doing there as well.
Okay.
Yes,
thank you, everyone, for your interventions. My name is Boyega Olorunfemi. I represent the Society for Planet and Prosperity, Nigeria, more or less the CSO's community. I appreciate the fact that you have been providing support to countries to advance the cause of advocacy for the Article 6. And I'd like to ask if you have considered empowering networks of CSOs to be able to also help in expanding what it is that people need to know, and then provide support to the subnational government in understanding better what it is for them. And I'm also saying if you've also made provisions or support to Nigeria, what is the status? Would you want inclusion of the CSOs to also drive engagement within this space? Thank you.
Yeah, maybe I can take this one. So maybe talking a bit also from my perspective, I worked 4 years in Uganda and also very closely with the Alliance. And actually there we had a couple of engagements with CSO and youth. Couple of workshops, couple of trainings. I think is an important element also of the work that we do there. I remember in Kenya, Uganda, we're working also with universities, with academia, because we also think this is very important to build the capacity over there. On Nigeria, maybe we can follow up actually bilaterally, because we are currently starting to work more closely on carbon markets over there. So I suggest let's touch base after the session.
Thank you. So I guess coffee is postponed. I'm taking this opportunity.
Your questions have the same effect, by the way. So,
okay. Yeah. Oh, you think? You hope? Okay. My name is Cecil Haferkamp. I'm with the UN's Sustainable Development Solutions Network. I wish it wasn't me here making these points, because I make them on behalf of a group of organizations in East Africa that have come together. I'm one of those outsiders, and many in the group that I'm here to speak for are kind of coming from the development space. It's exactly what we want to see. But there is a sense of, some people have spent 20 years on this, and the walls are quite high. You need to suspend your life for a year and read up on carbon markets and Article 6. So the walls are very high, but there is a sense really of these broader interests. They see this as important, and they see already both positive and negative implications of that. And at the same time, they acknowledge, especially maybe in East Africa, how polarized the discussion still is. There's absolute enemies of this, and there's those that are absolutely for it. But practically meaning this is not helpful. It's not helpful for governments, it's not helpful for civil society. Together with the complexity, it means nothing happens, right? So this group has come together, and I want to just mention a few points, very short. I wrote them down, and I caught my phone before the battery died. So I think this idea that this is a critical window now, the next couple of years are really important. Also to make sure that what happens on the policy side really fits the idea of supporting development in Africa, rather than kind of an external climate accounting thing, and really to ensure that that it's adjusted. This group worked, for example, with the AfDB around the launch of the facility for the AfDB, same idea, but really to make sure does this work for African development or not? The acknowledgement that the discourses around this are very different in Western Africa, you alluded to this, Eastern Africa, Southern Africa, and say in the Congo Basin where there is quite distinct discussion on this. And really the need to bring these discourses together, to learn across, possibly East Africa's most advanced, but then there's aspects that don't even appear in that discussion. Anyway, a lot to learn to everyone's benefit. An agreement really that we're now still in the phase of Wild West. Lots of things are happening now that are not good, not healthy. They are also at risk at discrediting the whole idea together. I spoke to a colleague yesterday from Botswana, and they say now they're going around Botswana trying to sign up rangeland and communities to sign up contracts for 50 years. They have no clue what they're signing. Nobody's helping them. Nobody can help them. And so we set up what we call a joint learning initiative on carbon markets for Africa. The emphasis on learning is because this is just for learning. It's not to take sides. We include those on the very anti side and those on the very gung-ho side. But it's very interesting to see how different the experiences are. There are development projects that in one way or the other benefit from carbon credits, and they have never seen that kind of money reliably come to them before. For them, it's all good. It's not about climate, it's about development. And there's others on the other side that you know as well. So again, it actually directly links to the points made before, that we're not forgetting there's a broader community of local organizations, of think tanks. This group is supported by WRI Africa, CAP-A, Nairobi Climate Network. There are lots of think tanks, locally grounded, locally working, that are very eager to quickly help communities and others to make up their mind. It's not about jumping on the train or not, but there's a great anxiety that this is a boat that will pass Africa or that will lead to more exploitation and extraction. So I think we need to also acknowledge that this is still a very polarized debate. The verdict is not out, and there's high degree of skepticism whether this is good for Africa or not. Thank you.
We are a bit postponing the break. Thank you. My name is Elijah Wapo. I'm from Liberia. I want to say thank you for all of the approaches that you mentioned. They are very unique. And it kind of make you to not know who to turn to. Are you willing, for example, if Liberia is doing some readiness program or progressing with framework, are you willing to work with others? Maybe somebody or group is assisting them already on the ground, and we think there are some unique approaches from you to blend with what they do. Are you willing to do that? For example, I'm alone in a room from Liberia, and if I get by, tons of activity are awaiting me. And to ensure that others, including government authorities, CSO, get the knowledge scaled down to them is a challenge. So are you willing, for example, to group countries in a closer area together? In the case of where I come from, Mana River, where we have La Côte d'Ivoire, Guinea, Sierra Leone, and Liberia, so that we benefit and bring more people so that when we get back, we are able to do our best. Your approaches are fine. Is it possible to blend them so that you can network? And when somebody say if it is UNIDO or UNEP comes to Liberia or in the Mana River Basin to help us, that we get a bit of what all you are doing so that it capacitates us to do what we are doing. Thank you very much.
Okay, let me defer the break for a minute.
No, by all means. The celebrity has entered.
All right, I'm Daniel from Ghana.
Yes, we all know you.
I have a question. And the question is about this. Okay, I'll make 5 statements, and then that would carry my question. The first one is that we know that we need to implement the NDCs by 2030. We have 4 years to go. And we are doing NDC revisions. They are also long-term plans. Okay, nice. We know that it takes around 18 months to create or give birth to artificial projects, 18 months. All right. We know that the demand side, COSIA, has only 2 years to buy credit. We know that it takes a lot of time to train people, right, to get policy, regulation, and all the rest. But I carefully listened to all of you. None of you talked about the fact that your program is going to help countries to really deliver results within this short time that we have. I'm saying this because in Ghana, I talk to a lot of politicians. And anytime you talk to them, and they ask a very simple question, where is the money? The money from carbon markets. After all these talks, it's good, they understand it. Where's the result? So I'm saying that, yes, it's good to understand the mechanics of the markets. It's good to understand all the policies, the regulations, the fine words by my friend here and everybody around, and you as well. Point is, in the country, we need results. Right? And we need results to show the policymakers. And it takes time to show results. So why are you not supporting us to deliver the results on the ground? Thank you.
Okay, I'll take this. Very brief. I think in terms of your comment about working together, we're all UN here, so I think there needs to be a bit collaboration. There is already collaboration in terms of different countries, but we also need to understand what our each institution's strengths within, whether that's regional, country level, or technical level. So I think, yes, there's already collaboration. I think it'd be better collaboration will be needed, especially if we want to go to particular countries. But I'll leave it at that. Thanks.
Yeah, maybe there were now a few questions, and I'm not going to answer all of them, but maybe to the colleague of Liberia, you were asking about grouping countries, and I'm not going to be tired of mentioning it. There are existing structures. Liberia, if I'm not mistaken, Western Africa, so there's the Western African Alliance, and this is exactly the idea, what you described just now, is the idea of the Western African Alliance. And I mentioned the Eastern African Alliance, and I heard also there's similar ideas now in Southern Africa. I know also a lot of countries in Central Africa are actually interested. There were some discussions with the Western African Alliance maybe joining them. And we, at least speaking from GIZ side, would be super happy to support and helping building these structures. And then maybe now coming to your question, does that help in bringing, I mean, the way I understood you, Daniel, is like how do we best support in getting projects off the ground quickly, right? Is that the right question? And yeah, I see you nodding. So I mean, what I at least described in our approach at GIZ, we are trying to also support a lot in the preparation of projects. I know I'm not working in Western Africa and Ghana, but I know some of my colleagues are in touch probably with you with a concrete project in the cooling sector. So these would be the examples I would mention here.
And may I come in on this one, especially for your question, Daniel. Look, what do we do to, facilitate some action on the ground? From the Secretariat's part, one thing is obviously, liaising with the parties, making sure that the complications get translated into something actionable. But for, more brick and mortar sort of thing, in the vein of, how can projects be developed or something which is a bit more tangible. For here, I would like to, I think most of the colleagues were here yesterday when our colleagues from the regional collaboration centers in MENA in South Asia and also in the Western and Central Africa office shared some examples of the country support programs. Now, that actually means, actually I shouldn't talk about it. I'll have my colleagues, Uma, to basically, okay. No, Uma, if you could just share a little bit about the country support where you helped the development of positive lists in Sri Lanka, for example, or in Iraq, or any others. So, I mean, that would be an example of what kind of support actually gets extended, although from a very integrated manner from the Secretariat and substantive teams. But because our RCCs are so close to the ground, based on actual country demands, they tailor an approach and provide them with that. Uma, over to you. I've blabbered on enough.
I was trying to convince my colleague from the Bhutan to speak on my behalf, but he's not ready, so I will speak on his behalf. So, thanks. So from the RCC MENA side, South Asia, what we work very closely with the government is that we help towards delivering results in terms of the impact. Like one of the example is that Bhutan, so we help them in helping all the aspects of the Article 6, whatever aspect specific to the positive list development, and then finally getting the operationalization of the Article 6 towards institutional development in the Iraq, for example. The country has already accepted the framework which we created, which will help them in terms of moving further, how the office has to be set up, how the Article 6 office has to approve the project, how it will deliver results, that kind of a thing. Moving towards the South Asia and other countries, Sri Lanka, we help them in all the aspects of the Article 6, which will help them in mobilizing resources towards going further. So that's sort of some of the impactful activities which we work, like other colleagues in the dais, we also do on the ground, which provide impactful results. So maybe should I add more, or I think I'll stop here.
I'm saying, for example, if you were to come closer to us, talking about closer countries, to bring us together and build KIPA, that's the kind of idea that I was talking about, but not to create another alliance or another structure. No, to get it correct. Thank you.
Thank you.
Daniel, I think I haven't got an answer for you right now, but I think you're also touching on a wider problem, right? The chicken and the egg of the investor, the off-taker, like, we're stuck and waiting, as our colleague from Zimbabwe mentioned, like, there are too few early movers. There's lots of funds who, quote, they have a lot of capital to deploy, right? There's buyers who are looking to actually purchase credits, but we're still waiting because it's the chicken and the egg. They're waiting for an off-taker to invest, and the investor's waiting for an off-taker. So, like I say, I haven't got the answer right now, but it's a wider topic, and I think, yeah, there's a solution that needs to come up.
Please. I think my point is about how to manage expectations. What is possible and what is not possible. And I think that is in itself is a risk to Article 6 in many countries. I'll give you an example. A former Minister of Environment in Ghana is the head of the Parliament of Ghana now, right? and he could publicly go to Parliament and make a formal statement in Parliament that it is seeking to mobilize carbon finance to pay for the pensions of MPs in public. And I spent the following 2 months to explain what this means. Meanwhile, I was not the one that made the statement. So I'm saying that there's this boom-bust expectations of the market that we need to address. For me, that's the point I'm making. Thank you.
I think I may not have something very intelligent to say, and I do think that what you're saying is perhaps not meant to get a response, but I think that this is an observation which, and I wait if Perumal or one of my more sensible colleagues would like to add to it, but as someone who may not know as much about Article 6, but knows a tiny bit about how markets function, it's perhaps important, we talked about it yesterday as well. Rules of the game are now defined, right? It has taken a long time for the market to take a certain level. Now, as interactions happen, you're going to get signals to either side, right? Some people are going to get swayed by the commercial aspects of it. But we all need to also understand that all this time that has went in writing the rules of the game, the institutions around the market that have had to be established, then need to be followed to essence, right? In pursuit of hitting, like, just putting up enough cases to make sure that, something which is like there's actual trades happening and the market has truly gotten off the ground, but then getting into that thing where you go for a very steep takeoff, but you end up stalling, right? So we've got to make sure that it goes in a way that is actually thorough. All the rules that have been established have been there for a reason, to make sure that there's security, there's integrity to the process, and at the end of the day, it's not the commercial aspects driving it, but it's that ambition of mitigation outcomes, which in turn would also, for somewhere in the value chain, for someone in the value chain, make that commercial viability as well. But we've got to make sure that the compasses are aligned properly, and that might be a bit time consuming, I think, but I'll leave it to the more sensible people instead. Over and out. Thank you. Any other questions? Comments? No. Okay, then can I just ask you to do one small thing, and then we go, and then we come back, or should we just? Okay, one super small thing. I need your phones for this. You all know how much I love my surveys, right? There's one very small thing, but believe me, all of this is going to help us help you, or help us learn from you. Could you kindly put up the slide, please? No. Sorry, I think we need to go for the coffee. But please come back, there's something we have to share with you. Okay.
Claudia Walter hier, die ist vom SV Klima. Also wir machen das quasi gerade zu zweit und dann mit dem Daniel.
Sorry? All right, to those who've already come back in, thank you so much for keeping up with the time. And as an added incentive, you're going to get a head start on that little thing that I wanted you guys to do. May I please request you to put the QR code on? I promise this is the last. No, this is not the last. This is the second last of the QR codes coming your way, and that would be the last you'll hear from me, at least on this. And in case you do not represent a party, but you are in a position where you talk to parties, then try to fill it up from that perspective. What do you hear the most in terms of the needs from the parties? Okay. Is everyone done? Thumbs up? Down? No, she's not done. Okay, okay, all right. We give like 5 more minutes. Would that be okay? Oh, you're done. Okay. Yeah. It's a short one, yeah. Okay. Okay. For all the friends here who've already completed the survey, Leah, I know you're filling it up, right? Good job. But what I'll do is that while you fill up on this one, you can just open another tab and scan another QR code. And I think this doesn't matter which stakeholder group you belong to. So, and it's very quick. And after that, I'm stopping and I just invite some of our colleagues to come up here and start the closing proceedings. All right. I think all of you are now finally done with all my QR codes. I promise there is nothing else coming, at least on the QR code front. But I'd just like to blabber on for another 2 minutes, but this time it is nothing content related, but I literally just wanted to thank you for making the time, being a part of this, sharing your insights. A lot of these things that, a lot of these QR codes that we've had you fill up will actually be used to, first of all, inform us and make our efforts to serve you a bit better. The other thing is also that much of these capacity needs, like the second last form that you filled up, you would also sense a little pattern there, because on day one, we asked you about one actionable challenge, and this one was anonymous in the sense that we didn't ask which party you represented. But we just want to get a general feel of priorities, action points, main challenges, and then we figure out the next steps and how we make our things a little bit more responsive to the needs that exist. Having said that, we've had very good discussions also on the sidelines. I would also like to thank all the resource people who came in and helped us deliver the sessions. I think our colleague from MSCI has already left, but we've had our SBM members who, despite their busy schedules, El Haji Mbai, thank you so much, sir. By the way, there is this saying that goes about Mbai, he's the most difficult man to find in Africa, because everyone has so many claims on his time. But thank you for taking out the time and staying with us for all this time. Perumal, would you be willing to join? Yeah. Mbai, do you want to come in? And I would also, by the way, while we are doing this, this is just, we are not doing the closing just yet because we're waiting for our closing speaker formally, but as we just wanted to wrap up the formal proceedings in terms of no further discussions on the Article 6 matters, at least for now. And no further surveys I've announced. There are no further surveys. I also wanted to let you know that all the presentations, all other material that we've used in this workshop, and if I manage to get the good picture, otherwise that lame picture that was taken on my phone, all of these will be on a Google Drive folder that we'll share with you sometime during the next week when I'm over my jet lag and my energy levels are semi-human. At this point, I'm just going to then hand over to Mbai. Mbai, if you have any comments, any thoughts you'd like to share with us?
Yeah, thank you, and thank you, colleagues. We spent 2 days, very intense days, and I think we had a very fruitful discussions, and many of you have now better understanding of Article 6, mainly Article 6.4. And as I said in my previous speech, it's your mechanism set up by UN parties, and it's up to you to do to make it as a reference. And we have already seen it. Every time the 6.4 mechanism, the Paris Agreement Crediting Mechanism, started to develop some guidance, some rules, you'll see immediately all the independent standards following what we are doing. And you have seen now also, because the 6.4 mechanism may deliver 2 types of units, units with corresponding adjustment for use for NDC, for other international purposes, and unit without authorization that can be used for result-based finance, voluntary carbon market, domestically. We have seen that all the independent standards are starting to label units, having units labeled with corresponding adjustment and unit without corresponding adjustment. So now, because in the past, the units coming from the UN were only for compliance or voluntary cancellation in a specific platform. But now, all and the standards will have 2 types of units. And we want the UN mechanism be a reference. And we have already seen that we are in that way. But the mechanism will be a reference if you trust on this mechanism and you contribute to make it as a reference. And Africa, as we said, haven't benefited from the previous KP mechanisms enough. But we now have the possibility to play a role. And you have seen that under Article 6, the host country is in the driving seat. The host country should set up the institutional framework, the legal framework, and may decide what will be done within the country as units to be used by others for compliance or other international purposes. Because without the authorization of the country, it's not possible for anyone else to use the units within the country. So it's why you need to play that role in your country. And we have seen that we are very well represented in all standards. Whether we are in the UN standard, where we have 4 representatives, 2 members and 2 alternates, and we are pushing for having gender balance, having more women in that body representing Africa. We want also having a younger generation taking the lead, because they are the one who tomorrow will deal with those issues. And we are doing our best to train the team we are working with to make them to put them in a position to take the lead from now. We also, even in the voluntary carbon market, and it's the first time that we see it, when you take Vera now, the CEO of Vera is Mandi from South Africa. It's something new. The biggest independent standard. Mandi, we worked 10 years together as negotiator, negotiating in the African Group of Negotiation. Now she's the CEO of Vera. You have seen ICVCM, where many Africans are in the board, some are in the different panels. You have seen VCMI. You have here in Kenya, Bianca she was also a negotiator with the African Group. She's leading VCMI for Africa. You have all those young generation, the new generation, taking the lead in those. That needed to be translated in concrete actions, in concrete projects and programs, bearing in mind that we are not just here for carbon market and dealing with units. We are talking about development, because we use the carbon market as an instrument. From many other instruments, it's one of the instruments that can be used to meet our NDCs. And our NDCs are built based in our development priority. If we articulate very well our development needs, our NDC, and the implementation of the institutional framework on carbon market, I think we will meet the expectation of our population and their need. It's just that some word I wanted to share with you and to express the hope we have that we will be better in this market. Because the market, the Article 6 is under the responsibility of the host countries when it comes to authorize the units to be transferred or not to transfer. And we have already seen that we have some African countries that are taking the lead, like Ghana, like Kenya, like Senegal, and so on. We wanted all the others to benefit from those experiences. We have seen that we have African Alliance in West Africa, in East Africa. We are setting the one in Southern Africa and the Central Africa. So based on all of that, with the support of many partners, based on that, I think we can meet the expectation, as I said, of our population and of our leaders. I want to thank you again for your participation in this workshop. Thank you.
Thank you all. I will take, I'm not going to talk anything about authorization or corresponding adjustments, but I wanted to sincerely thank all of you for coming all the way, to participate in these 2 days with us. And also, we had an implementation lab a day before. This would not have been possible without, I think, physically we are about 3 from Bonn, and other colleagues from RCCs are here, so I would like to name them, but in terms of preparation, there's many people that you might have seen for your travel, etc., name Eunice and others who have been working back from Bonn, who couldn't travel. So I wanted to sincerely thank all my colleagues, Zubair, Nitin, Uma, Yannick, and the 2 leads, or 3 leads, in fact, Walters, Willie, and Anna, and also the full RCC team for making this happen. I also wanted to secondly thank all the panelists and presenters who came in and provided with new information than UNFCCC talking about the decisions and the dates and what needs to be done. And I think you heard, and also we learned a lot. I think it's more like we heard from the implementation lab on the first day. It's more about peer learning, and we have some friend runners here who shared their experience. So I also thank all of them who came forward open in terms of providing your views. And then when I was jovially talking to people, they said, what do you do next? Right? So what we have done is also we captured what you have provided, and all these discussions are being taken by, as I told, my colleagues across from our RCCs are taking notes of what we need to deliver. This will inform us also in terms of tailoring some of the capacity building aspects. We had some practical solutions of making kind of a dossier in terms of the relationship between corresponding adjustments, reporting, and the timelines, etc. And also the aspects related to the linkages with CORSIA, which came quite strong. So we have taken that as a feedback in terms of looking at what we could do. We would prepare, we do as in the earlier panels, some of the SBM members have said, we do have certain knowledge products where some of your questions are there as a response. If you really look at the Article 6 manual, I won't say how many number of pages it was, but with many examples, you will see the different types of NDCs and for each types of NDCs, the reporting requirements. So that's, I would say, I would invite you. I always used to make a fun of my own CARP, the Centralized Accounting and Reporting Platform. People who have listened to me earlier, I would say that's the crap, because it takes a repository of all information, whatever is there. If you want to look the Secretariat's forms, templates, decisions, everything is available in CARP. Over time, you will also find the agreed electronic format, which will run the system-based consistency check, will also be available in that web page. So I will all sincerely request you to have a look at that page, CARP. I won't tell you any extension link because I myself will not find any of my official websites without the help of the Google. So just Google it, CARP UNFCCC. You will find quite a number of information. And I would sincerely request you to read the Article 6 manual, which basically takes you through the different reporting obligations. Right? And then when it comes to the reviews as well, we have now a training module package that's been made available. So whether you will be participating in an Article 6 expert review or not, but that will give you what elements are being considered by the reviewers from the perspective of when they undertake your bilateral cooperation reviews under Article 6. And the third knowledge product is the host party participation, like with the help of our stakeholder interaction team as well as the capacity building team. We do have an interactive manual which will guide you through both. You have both the PDF version and also support version. This you will not find in the CARP. This you would be finding in the PACM website, Paris Agreement Crediting Mechanism, and Google it. And there you will find the relevant information related to the host party participation knowledge products. And apart from that, it's an open invitation, so at any point in time, you do have contact emails of us, which is available, and I've spoken to many of you we also have published certain videos on how to fill the host party fulfillment forms. We are also working on, probably in a week's time, we would have the full transition package recordings where people are talking about specific elements in a video format is available for you to listen in as part of the product, because this has a short living thing until December. So you would also have that being in our website very, very soon. So beyond that, as I told you, we also have learned what other things that you are looking at, some of the things. And I also can sense that what can come from Marina in Belém on some aspects that you might have. Probably we would also be preparing an information note on the capacity building support that we have provided, so some parties might come forward with dedicated requests to the Secretariat to offer on certain topics, so which might come forward. Yeah, apart from that, I sincerely thank all of you for active participation, and I trust that it was useful to you, and for people who are staying for more time here for Africa Climate Summit, I would wish you all a very great success to be here. And for people who are traveling today or tomorrow, have safe travels back home. So from my bottom of my heart, thank you so much on behalf of UNFCCC and other partners. Thank you so much. And now we have our Asian chair, Richard, to say a few words to thank the people who are here, and we had the Article 6 training. So over to you, Chair.
Thank you very much, Remur. Thank you, colleagues. Apologies, I was in another session, just coming in, but I hope I'm not too late to say a few words of congratulations, but also thanking you for the time you have spent together on this important topic. So let me begin by expressing my heartfelt appreciation to the organizers, the UNFCCC, of this pivotal event, particularly, of course, the African Union, UNFCCC, and the other partners for providing this platform. Let me commend every panelist who has been here, the policymakers and participants, for your thoughtful and dynamic contributions. You have gathered here for not simply to talk about carbon markets, but to strategically interrogate how these instruments can catalyze real, equitable, and ambitious implementation of Africa's NDCs. Indeed, as the AGN, we see carbon markets as both a financing instrument and a just tool capable of bringing the deep adaptation and the mitigation finance gap that African countries face. Today's event reminds us that carbon markets, if designed with environmental integrity and climate justice at the core, can unlock new and additional finance, support innovation, create jobs, and empower communities. But we must shape them on our themes. One, African countries must be supported to establish domestic frameworks for engaging in Article 6 mechanisms, including institutional readiness, safeguards, and equitable benefit sharing mechanisms. Second, we must ensure that carbon market participation does not undermine NDC ambition, nor replace grant-based finance for adaptation. The Paris Agreement under Article 6.2 and 6.4 calls for voluntary cooperation that raises ambition and supports sustainable development. Therefore, this must guide all our market choices. Third, we must empower African project developers, enhance transparency, and create African carbon registries in line with the AMSEN mandate to avoid exploitative arrangements. The upcoming work of the African Carbon Markets Initiatives and the call in the Tripoli Declaration adopted by our ministers in July 2025 should be able to strengthen regional carbon policy frameworks, which should offer a strong foundation. Colleagues, as AGN, we stand ready to continue providing technical leadership, policy guidance, and capacity building to help member states harness carbon markets in a just, inclusive, and transparent manner. We thank all our partners who are working this journey with us. Let me conclude by reiterating what we all know. Africa does not lack ambition. We lack access to finance, technology, to fair rules. Carbon markets offer one of many pathways to unlock this access, but we must remain vigilant, principled, and united in how we engage. I thank you all once again for your insights and presence. Let us carry this momentum into the final stretch of COP30 preparations and beyond. Convinced that convinced that with clarity we should be able to harness the carbon market for the benefits of the continent. I thank you.
Thank you so much, Dr. Richard Mugoye. Pleasure to have you here. And thank you once again, everyone, for taking the time, traveling all this way, and bearing with us for all this time. It has been a pleasure. And I hope that we meet each other next time around. When we started 3 days ago, let's say we met here, but I hope with all the discussions we've had and all the experiences you'll aggregate until the next time, we'll start the discourse at this level. Thank you so much, and have a nice trip back home, or a nice ACS too. By the way, please, a big round of applause for our colleagues right in the back who've made sure that everything goes seamlessly. Thank you so much, guys. Such a pleasure. Thank you. Goodbye.